Hey, Esther completed. Oh, that's good. Esther Scalp 1. Done. Let's fucking go. So I just ate a piece of banana bread. Seems kind of sticky. What we got? Hey, how you doing? How you doing, Mario? Chris? Just waiting for YouTube to catch up on the screen. Oh, 4 people in. Yeah, well, it didn't go to the entry, but it's one of those things when you have a range trend and you have a hold level is they're both triggers. So where is it? One of these. Okay. So this side and this side are both triggers, and if one of them gets touched, it'll typically go off and move to the other one. So given that we know that hitting the range trend is going to come back up here, what you can sort of do is just open a swing position. You'd almost call it a swing scalp because it's not exactly it's not like you're going to have it open for a really long time, but you can open it when it's down here and then just target the first resistance up here. And worst case scenario, what ends up happening is it ends up coming down to the new range trend, in which case you then add to the size of it and run it back up. So yeah, because when it sort of just opens in the middle like that, you don't know, like, does it go that way first or that way first? So yep. But what you do know is it goes down, it goes up. So it's now you don't have to worry about waiting for the entry because trade's already done. Sol finally got out of that annoying little range as well, so that was good. But it's creeping up towards the daily trend there at about 197, so it's still coming from the wrong side of trends. It's if it pushes all the way up here today, it's really just likely that it ends up retracing. Same here. It's come from the underside of resistance. So I've got this range trend. What time frames this? 2-day. We've got this 2-day range trend coming through here. So even if it creeps up to that or pokes through that, it's probably still going to end up coming back down. I don't think this is going to be a forever candle. We've still got this one. Obviously, this is a huge time frame. See, it'd be like the third time we've run into that trend, and every single time the candle ends up closing back underneath it. So, but this is the first time that we've got hold levels here. So we've now got the thing to actually break that trend. Yeah, this is some of the stuff from the other day. So it still wouldn't surprise me if we get a play between this and this, which would more or less be like a double bottom. We've kind of got all the right sort of sentiment for it with, you know, pre-positivity around this whole China meeting, which pre-positivity can very quickly turn into an excuse to dump price when something might not go so right at the meeting, or they don't get a result or something like that. And we've got high time frame supports in here, and we've got the equivalent resistance there, and we're just in the middle. So it's good old 204 again. And this closed the other day under 204 as well, and hasn't quite gone back to touch it since. So just another reason to be a little bit careful if the price hits 204. But the monthly, this is the important one. Even if we dump again because of all those other time frames, what we want is just this monthly candle in 2 days' time to close in that gap. Don't really want it to close higher, we want it to stay blue. And what we want is we want this thing to be able to become a range in the future. That's what we want. At least for the spot holders anyway. Because if that becomes the base of a range, and then price can go up here. Okay. So Trump closed over that level that we marked out yesterday, and then did its little bounce between the levels. I didn't take that trade, but that was just one of those ones from yesterday. And we've hit that 43-day trend, so most likely thing is that the price on BTC will do some kind of move up to this 114 area here again. So that's in play now. If you were to open a position on this, you've got to be able to manage it if it comes down first, because it could dive if there's some bad news. It could come down here to the range trend and then push all the way back up. So it's if it just keeps plodding along, it'll come up to that level, which we definitely have cake sitting there for it. Maybe just a little bit more sideways while these gaps sort of fill up, but it only has to get up to about there, which is kind of where some of that 100x leverages. And the way the price has been lately, those people probably feel quite safe with their shorts, and so then and they could easily close their shorts before the actual price gets there. So that's why you get squeezes. Quite often squeezes or sudden dumps, they're to lock in the liquidity. They're to make sure that it's underwater, and so you get the initial squeeze, and then it can sit there and eat it all. Nom 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 nom. But they may just be waiting to fill in a little bit more space. Whereas Soul Strength against BTC was really good, so it's actually managed to start breaking out, even though it so we got the hold level, we closed above the trend, and so 1, 2, 3, and now 4 days in a row we've hit the break level. So the break level is not converted to resistance, and first resistance pretty much is going to be when we get up to this little line up here, which is going to be a prior broken trend crossing over with a range trend, crossing over with a horizontal origin level, all at 17933. So if it closes over that tomorrow, that's a lot of stuff that can become support, and the more things that you convert, the more push you can have. But it's also entirely possible that that's where a rejection comes, if there's going to be a bit of a retracement. and safety assets opened under the trends and rejected off the trends. So this is so it's kind of just stuck in that little bird's nest of prior trend, support trend, and it's not really a perfect means of closing, but it's as far as getting a guaranteed move down. The issue with this when it comes to altcoins is that if it dives this trend, hits the range trend, it could bounce back up, and it doesn't have a hold level or anything to stop it, so it would have to come back to at least the 66.72 or back up to the 66.94. So it's not a perfect close. It's a little bit trappy. So you might get a little bit of a quick run up on alts, and then yeah, if this taps that, you might get a bit of a move the other way. And what we got now? I've got a bit more liquidity coming in. So more positions opening on Sol. So that's good. Filling the gaps. It is giving it a little bit of a reason to take a little swipe to the downside too, though. So it's you might get a little bit of a pullback and more up, but it's good when the liquidity bands start to move up with the price rather than price going down and the liquidity bands moving down. Okay, totals doing. So totals held the trend line, they're going to bounce. So it's still got the same issues up here as far as resistance goes. So we've still got trend resistance, horizontal levels at 1.53 and 1.52. So really it needs to go up and stay up, create a hold level. Once it's got a hold level, it can try to break a trend. The positive thing is that we haven't revisited this down here yet. So if we do this, and we note that this level right here, 1.48, is where that candle bounced today. So what that means is that it's trying to create a range where this is the base of the range across here. It wants this to be the top of the range up here, and it wants that to be the origin candle that basically builds the whole range. So what that usually looks like is something like this, and that's kind of how your range should range. If it is going to fail, what will happen is it will normally reject off here or off here, and then it will come back down to test this, and that then becomes final boss. If that then can't push it up to a new high, then this whole range fails and it goes down and it has to create a new one lower down. So it is good to see it bouncing off there. It's kind of like step one, but if we obviously need step 2, step 3, step 4, step 10 to all play out for that to continue being good, but it's good. Do you typically use leverage on your scalp? Yep. Someone's just asking me questions in the Discord about leverage. Okay. Great answer. Yes. Right. So What's got going on? So 15 minutes just been working its way up. So this was just one of this morning's little scalps, which was just to enter in down here inside this and then take TP here. So I did actually TP some before that based off a different time frame. Still a little bit open actually. Just looking at it now. So Sol's actually looking pretty good. If we can get an hourly close up over the trend again, we might be able to target 198. Yesterday's sort of thesis was that we should at least get into this range between 198 and 204, I think it was, based on the daily, or 208, something like, or 199 and 208, something like that, based on the daily. This. Yep, so whole candle, base of range here at 191, so that's why I entered in at 191 this morning. And we should, if we can just sneak over this trend, we may even be able to push through that trend because it's not that far. So we should at least get to this 199.829. And what we want to do is tomorrow we want to close over that. And if we can close over that, that then plays back into the future prediction of the monthly. So we just want to live the last day of the month. We basically want to live wrong tool, in this box if we can. Which makes for us being in between these two lines. And so if the daily can do what the daily is trying to do anyway, because of the way it's ranging, if it can do what it's trying to do, then it puts us in the right box to close the monthly in the right place, and then it's up to the monthly to have a pump, and that could be, you know, the start of November, first day for a week here. It doesn't really matter if it has a pump, and then as long as it closes up by the end of the month above the right level, then fractally everything you're looking at here then repeats, but on a monthly scale. So it's kind of what we need, because most of the stuff that's keeping the price down at the moment is things like that that weekly range trend that we seems to always cause big dumps or big pumps. So we sort of need to develop some monthly structure if we actually want to get over all of that stuff and get past, you know, these sort of trends that are up around here. And it'll probably happen because if we look at the daily, we've got this daily range trend up here to be retested, and the current spot on that is about 247. You know, tomorrow it's around 249, you know, etc., etc. And so if we can get in that gap, close that gap, close the month, move into the top part of the daily range, break out of the daily range, go to retest the range trend, and retesting the range trend, just put in the chat if you're absolutely not following what the hell I'm talking about. But and then if we do this, go to the monthly and just think ahead here. If we were to do everything we just talked about on the daily, then we end up closing in here, not making a hold level. We then break the top of the daily range. We then have to find the next range. The next range is a range trend, which is sitting up around 249 or 250, which then puts us above the 1618 on the monthly, which means we can create the base of a monthly range there. And if we do that, even if the monthly range is a complete flop, it should hit 315. Even if it's a complete flop. and then maybe it goes to 0, whatever we got there. Now, if it doesn't, then to continue the monthly range would get you to 380 or to 446. And at 446, maybe everyone is saying that Sol's going to go to 1,000, and then it starts pulling back, and everyone goes, oh, don't worry, it's just a pullback, and it's still going to go to 1,000. Don't worry, don't sell, don't exit. Yeah, it won't go to 0, but you know what I mean. So that's when we start looking for high time frame break levels. Yeah, it's definitely possible. It's possible. It's just like people can say things like the price is going to go to 1,000, and it's really easy to find a case for that. There's actually a case that can go to about 1,300, which would be even bigger now because time has gone past and it's not facing trend line. But you've still got to build the structure to get there, and that's I don't really have a great analogy for it, but it's kind of like if you're staring at a building with a whole bunch of open windows and you know where you could go and climb in, but you've still got to have a ladder. So, and that's the thing about price action is if this candle closes down for the monthly, it creates a ladder the other way. And then depending on exactly where it closes, how far down it closes, it creates a ladder that can continue the move down. So it's like this, if we just take this big yellow candle here, and I think, I showed this on yesterday's stream, but there's a reason this candle pulled back up inside 123.532, because if it had not, the price would have gone to $17. And that's how range structure is formed. It's not a random thing. So the failure to close under that level meant that inevitably it was going to come back to here at some point. So in reverse, you can kind of you can enter a long at the target of a short if you know the way the target of the short closes, and that's you could have started building a swing position here to target back to here, even before you've broken a trend. You just because it's just horizontal range structure. And the trends will get created later and they'll get broken later, and trends are about time. Like trends are annoying because trends are why that 15-minute scalp this morning took an hour and a half to complete, because it kept putting trends in the way of the price, but the price was going to go where the price was going to go. So it's just a case of having patience and waiting. And the only time that would change is if it's been so long that new horizontal structure forms that actually can stop it from happening ever, which doesn't happen very often. So, yeah. So, what we got? Hourly close might be above the trend, below the break, or above the range trend. It's very bullish. Very bullish. 4 hour. So with the 4 hour, see this candle here, which bounced the trend and tested the hold. Now, because the trend held, the next bounce of the trend, the hold doesn't matter anymore. It's probably going to go for this break, or it's going to go for one of these origin levels. So there's that 198 again. So we could actually close just a 4 hour candle over 198, and then that could send it up already, and we haven't even got to the daily close. Or we could reject off 198 and go down. So yeah, we've got trends at about 200. But yeah, this is super bullish. And we haven't really got to let's back over again. So we've got this new liquidity that's coming down here. Got these gaps in here. I mean, if you were being smart about it, you'd probably pull back, just because if you pull back, people would believe that's it, that's the top. and you would and they'll enter, and then of course that means there'll be short positions opening up in here, and it'll make it easy to push through it later. Any levels of entry if sidelined currently? Oh, yep, probably. Let's have a look. I don't think I'd long style now. It's just kind of too close to resistance levels there. Unless, of course, you just open a very small position and maybe have to hold on to it for a little while. You could try and just scalp between there and the trend, but make sure it's small enough because this is already doing a lot of naughty things. It's gone through a range trend, through a normal trend, through horizontal resistance. It's about to hit another horizontal resistance. This is, and we're getting close to the end of the candle, so you'd almost just be better to wait an hour and just make sure that this holds one of these levels. So, because anywhere in the next hour, this thing could pull back down. So, let's see if there's other tokens. Oh, thank you. Yeah, I would wait for the 4-hour close and see if you have a close over some of those levels. And Asta's probably going to reject either Asta's probably going to reject somewhere in here. And most likely end up back down here. So just put that, this is on a 12-hour, but just put that trend line on there. And then if it comes back, you've got 1, 2, 3 points of entry. You've got these range trends that are coming down like this. You've got the one that's coming through there like that, which it doesn't show up automatically. I need the development version of the indicator. Okay, we've added these in now. These, and yeah, if it comes back down, but one thing just to watch for on Asta, just in case it's going to become an absolute rug pull, is that this is your monthly. Okay, so if this closes the month between under that 99-cent area, let's just see what the confluence is like on the weekly. Okay, yeah, which would also be a break of weekly trend. As much as you can say this thing has a weekly trend, it's just between these two candles here, and we are below it. So you could take a trade based on polarity with this, which would be a very interesting test case, but I wouldn't do this, but you could. You got a weekly trend. In 3 days' time, if that candle is yellow, you lose the weekly trend. And you've got your monthly close coming up. So if they hold the monthly, then they probably, because the monthly close will be before the weekly, if they hold the monthly, they're probably not going to lose the weekly, in which case you could just take a trade on this and TP where the candle would turn yellow, which would be sort of the 1.14 area. And the reasoning behind that is they didn't actually crash the token. And if they didn't crash the token, they're not then just going to crash the token. So that's kind of trading polarity, where the candle would go. Looking at it from a daily, it's interesting. right through there. Yeah, so looking at it from the daily, it never lost the uptrend because the corner was on it. So it's under the daily downtrend, but it'll try and do everything it can to get back up to there at least. But it needs basically one more day. Even if this candle closes where it is right here, right now, then it could open on the top side of that daily trend and bounce. And yeah, that's about 1 point. Where's that level? That's not bad. Yeah, there's no real serious resistance on this until you get up to 1.28. So even if you just get a daily engulfment, those levels don't really make sense. So maybe it's this. Yep. Yeah. So this is what I meant by what could happen on the monthly, just if you want to get a bit of an idea fractally. See how the range went up, rejected off the 2, came back to the whole candle. So just if you're looking at Sol on the monthly, which hasn't happened yet, but just to reiterate, if this gives us the close we want, and then it gives this next close we want, then rejecting off the 2 would sort of be your very first sign of a top, which would be that 315. And that is an all-time high. I think if we got up to 315, there'd probably be a pretty epic short squeeze and it might go higher, but it's the same concept of, I'll flip back to Asta in a second, but if we close here, then we close here, then we bounce here, then we go there, and then that is the first chance of a top. And it could come all the way back down into here. So then if we go back to this and have a look at this candle, same levels, closed here, bounced here, came back down into here because it failed to go higher. So that's the kind of thing we might see with the monthly in the future on Sol. As for this, we could create a new range inside here, but that has to close up and close over that. So we up to. Nothing there on the daily. Okay. Oh. We bounced to daily origin level. So you could probably, sorry, 4 hour. Bounce to 4 hour origin level. So it's going to stop it. Is anything going to stop it? I'll just rechart this. Yeah, that looks high enough. missing something. Ugh. Okay. Oh, okay, so it's pushing onto the trend now. So 53 minutes, if you break over this trend, then it's probably gonna try to get up here. There is like a little reverse trend coming through here. So yeah, if it breaks over this, nothing else really to stop it. So again, it's kind of a bit of a swing scalp, but you could take it up to the reverse side of that prior broken trend at about 2.5615. Would have been better to get it at the origin level down there, but still, it is what it is. And then if it gets through there, range trend would be your next place that it's heading, which is 2.6. And if it gets through there, its goal in life is to hit the other side of the range. So if this is the range trend down the bottom here at about 2.48, sorry, if this is the origin of the range down here, this is the opposite side of it up here, which is about 2.63. So you could look to another one. You could just wait 51 minutes, make sure it doesn't pull all the way back down under the trend. If it opens with the next candle on the other side of the trend, you could start to build the position and then TP at those various levels. Hype. Hype's just going to keep tapping things. So the hype breakout might come tomorrow. Just looking at that. If it closes over this level here, which is 48.094. If it closes over there, it should bounce up. Let's delete that. Should bounce up to that 50 something, whatever that is. 50.850. Yeah, it's probably tomorrow. Okay, retire on Farcoin. So this one's got a range trend up here. Doesn't have a hold level, so it's probably going to reject prior broken trend coming through here. So you can try to squeeze a little bit more of the fart out. Ha 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 ha. So we got 0.4056, 0.4149. But yeah, it'll probably reject off that range trend. If they go really boring on this for the next couple of days, what they might do is close that candle down like that and then close the next one up and then touch the range trend and have a hold level quite close to it. So if it goes sideways for a few days but ends up creating a hold level, then their intention would be to break through this. Because it'll also, if they close that candle blue, you get that as well. So your little breakout wedge will be getting tighter. Still waiting for this to come down to the entry. So it's just hasn't yet. So with this one, if it wants to create a daily range, it should come bounce off 0.0598. And so you could, if we get a wick down to here, you enter here, and then just TP back up at the 2, just in case it fails. If it comes back to the 0.0567 level, then anywhere down in here, you would put in a bigger size than what you would put here, so that it averages it out, and then just TP it lower. So just take the TP at the 1618. And what's this up to? Okay. So this is getting really compressed on the daily. So that's why it's stuck in here. It's not really anything I'd take as far as a long on this, but if it does go up here into this candle, there'd be a short. So pretty much just between those two levels. Did you see that pump short from yesterday actually played out almost? So it ended up closing the 4-hour candle and shooting back up again, which is why I said if it closes the 4-hour candle, just get out. But then it ended up coming back down anyway. If you were here yesterday watching 1 minute price action. Very bored. Let's find it. So it's on the 4-hour. It was this candle here. And it was that one there. I think it was that one. Something doesn't seem right about that. If you were here yesterday, was that was the one, eh? Pump. Yeah, that's right. We said if this candle was that candle, if that candle closed over the top of that candle, this could happen. So that's what. Yeah. Yeah, and that's what I mean by it looks like it almost played out. So actually didn't quite hit. didn't quite hit the target by 3 on the very, very, very final thing. Yeah, they're all custom made. They will come at some point. They will be available. They won't be free, but hopefully they won't be expensive either. And they will make a lot of this way easier for people. Way faster, really. I mean, it's nothing you can't learn manually, but being able to go through a series of tokens and set alerts for key structural events is probably the key thing. It's yeah. So and at this stage they will not be available to people who just want to you know buy a TradingView indicator and have it, because as you can tell, you need to learn how to actually trade, otherwise these things are useless. So they'll be available to people that actually are part of the Discord and want to learn and just want, well, they're almost like training wheels for a bike, kind of. They just make it a hell of a lot easier not to fall over, and but they also make it a lot easier to find financial opportunities for trades, because you'd get something like this, like when this 4 candle block develops, you'd actually get an alert telling you that you now have this short. So that's you'd also have an alert that you've got this long. So as crazy as it sounds, you can take the short and the long. We call that a schlong. Anyway. So yeah, this was that. And we'd marked out this box there. Let's just go back over that trade. Educational recap. Maybe we won't do it on a 1-minute chart like we were yesterday. But so you see the big volume buy that came in on this candle close to target. So you're not taking the schlong. Yeah. Yeah, that's it. You almost, you like, just to be completely responsible, you almost want to say to people, you have to prove you've watched the educational material and pass a test, and then we'll give you the tools. Otherwise, you're just going to get people like advanced hold levels, as an example. An advanced hold level has got more than one candle in front of the hold candle. So because it's got more than one candle in front of the hold candle, the candles after the second one could have already eroded or tested every single level in that hold candle. And because of that, the advanced hold level may not hold anything. It may just go straight through it. So yeah, you've got to have the education on how to look at it first. So this was our trade. Can't have been that candle. Must have been. I think I'm going a bit nuts now. Oh yes, it could be that candle because we've got replay tool on. That's a dumb moment. This is a dumb moment when I'm sober. I've actually got a bunch of drinks being delivered. Okay, let's go back to that. So we were looking to take an entry once we got up above this one, and we were watching initially, I think, on the 3-minute chart just to get our reversal. play that out. Okay, and we initially saw this whole candle get formed, but it's a single candle, so it's something lower time frame. So then the next step was to, I'll just get rid of some of that. So we saw this. Okay, so then that means that there's a lower time frame that has reversed inside here. So going to the 1 minute, and that's kind of where we looked at it and went, oh, look, we have a 1 minute origin level, we have a 1 minute range, we've got something slightly bigger than a 1 minute range, and I think we found later it was like a 6 minute or something, or a 3, not a 3, sorry. It was something, but whatever. Might have been an 8. And then I think we ended up going a little bit higher. Pretty sure we did. So then we swept the top of the origin level. And rejected, and then off we went. And then we found polarity. And so this down here, the fact that it wouldn't exit that box yesterday. Remember Tiger Elephant Trail. Yeah. What we'll do is we'll get some wooden boxes made up, and you just got to put the round peg in the round hole if you fail to do that. Anywho, so because we weren't exiting the bottom of this box, what it meant is that although it hadn't actually created a hold candle yet, what we said is that if we don't close under here on the 4 hour, then whatever profits, just take them, because you're probably going to bounce back up. And that's, so if you look at this on the, see, boom. All right, so that's polarity. Before we even had a closed candle, you could already tell by looking at a lower time frame what their intention was. And we entered up here, and if we had had our stop loss, say we thought, oh look, the trade's going all right, and we're down here, and we thought, okay, cool, we'll put our stop loss at our entry, then knowing polarity means that we know that that was going to happen, and hence we would have just taken profits. I don't know if Marty can write his own name. He just always has party after it. Just does not seem like the life of the party. Seems like that annoying loud person at the party that you just wish wasn't at the party. But, yeah, that's my personal opinion. Not the views of the company, blah, blah, blah. Yeah. So I'd gone to bed by this point. But yeah, that's polarity. And that's why it's a good thing to understand. So all of that bouncing around on that box there, we close that 4 hour, boom, straight back up. And then after that upwards 4 hour move had played out, which could have longed, we then, let's go back to that. So looky, just chuck a fib on it in the other direction. This candle, there's your entry, there's your TP. Whilst you are waiting for this candle to go to your TP. And this slightly missed the TP when it came to the perpetual contract. But I'll show you in a second why it's sometimes good to also have the spot So because I trade Sol quite a bit, you'll notice I've got Sol spot here as well as Sol futures, and I'll show you why. Just like pump, TP should be down here. It's going to take a while, right? Oopsie, we always do that. Okay. All right. So the first thing is, if you ever are wondering whether or not you should wait for it to come back or go, no, something's wrong with the level, it's done, it's the volume, right? So when you see a big spike like that on the low time frame on the candle that almost touches the level, then what you can assume is that the trade has played out and you should just close it. Even if you're closing it up here and not necessarily making as much as you thought you're going to make, don't be greedy, be careful, and just if you see that volume and it's on the candle that got really close, close it. Okay. The other thing you can do is watch the spot chart, because sometimes, sure I had that in here somewhere. There it is. Okay, so same trade, don't even need to zoom in, but same trade, same thing, level hit. Okay, so same exchange, etc., just different chart. So, and if we do bother to zoom in, that was your spot. So yeah, it's not a bad idea. If there's a token you're trading frequently, have the spot chart, have the futures chart. You can also just put an alert, like if you're trading the futures, you could just put an alert on the line on the spot, and if the alert comes up, close your trade, even if your futures TP hasn't hit. That's today's lesson. How's that? One trade, you get to see finding a short entry, creation of polarity, why you would exit, the fact you could take a schlong trade in the other way, trade in the other direction, and the difference and why you would also pay attention to both the spot and the futures chart for the same token on the same exchange. Yeah, I can't remember what we were talking about, but where was it? um, I can't see the question anymore. Maybe it's gone. Okay. So now what's happening in the real world? 97.54. BTC cake is building up. Sol's just pausing, waiting for probably more liquidity to appear. in there. Okay. Let's look at some stuff we didn't look at. Just see if there's anything glaringly obvious. Okay, BNB. Nope. So Trump's inside the weekly hold. So that might be a short. Assuming it hasn't already played out. Let's see if this candle has gone down. So this is what you do to, if you're looking at something like this and going, okay, well, we should have a short based off this candle. Put a vertical line like that on the current candle, because that line snaps to the opening of the candle at a lower time frame. And then dial down your time frame. Okay. And in this instance, you can see this daily candle hit it, but we don't know whether that daily candle has already retraced back down to the target, because once again, it's a full candle. So you got to go lower again. So you just keep turning your time frame down. And so looking at this, it hit it, came back, and it stopped at this line. So that's, again, polarity. Okay, so that means that it's going to try and close. This could boom, actually. Because what it means is it's going to try and close over this big candle here and use the top of it as something to bounce off. So it's probably a slightly higher time frame. There it is, 2 week. So that's in 10 days time. That's interesting. So it wants to close up on that in 10 days time. There's nothing to stop it. Maybe it's even bigger. Ooh. That could be fun. 4 week 4 week close in 10 days time on Trump token. So set an alert. Keep an eye on this. It'll also be a hard close of the range trend, which means it targets the top of the range, which is there. So that could be a 70-something% move. What happens in 10 days time? Is there anything? Like anything presidentially related? Trumpy stuff? Um, yep. So main downtrend, sorry, main support trend angling down. First array moving up. So kind of like this is how downtrends, support trends quite often. Actually, sorry, it's not quite like that. What it is it's like that, and then that, and then the next time you have a down candle, it'll be something like that, and then that, that. So that's how price kind of curves around at tops or at bottoms. That's why you can actually do, if you're trying to figure out where the trend is doing this, you start with down facing ones and then use the same anchors, the same rules apply. So you would go from here to here, and then that closed under it, rejected off it, which is why it kept falling. The next trend anchor becomes that one, and that was technically above it. It was a bounce. This was a sweep of both the trend and the range trend to grab all the liquidity, and then this is coming back up. So if it closes over the top, then that's your fib, minimum bounce. If we have a pump prior to the 4-week candle closing and it closes over here, then position here, target here. So that would be about a 49% move. And just do it with, like, say, a third the size that you would want to risk. And then if it comes back to the whole candle, put the other 2/3 in and then target there. Smaller move, but you'd still get out in profit. Because if it does come back down here, it'll be underneath that previous trend, which was that one. It might get stuck in there. Okay. And if it doesn't close up above here, then take it from anywhere within the candle up to just the 1618, which would have confluence again with that trend, which would be a retest of the broken trend, and TP there. It may close over top of it and then bounce and continue. Prior broken trends can be recovered. So it's, but yeah, this should be somewhere in the next 10 days a Trumpy trade. What do we want? We want hold levels. Set alert. Um, That was another trade we missed, but range base, hard closed over that, bounced off that, target that. Three point 3.66. Yeah, could be. I mean, 114 is a really key level across so much. But it's just kind of hard to tell in advance whether we'll recover it or just could just literally sweep right through it, and in the monthly charts kind of the same really, as long as we don't make a hold level here. It's no different than Sol. As long as we don't make a hold level, all we're going to do is shift this trend from here to here. And if we don't have a hold level and we shift the trend and we bounce on the trend, we should come higher than the top of this candle. And then it just depends on where it closes. The top of that candle's 113, 995. So yeah, and in the bullish case, which I just don't see happening, is in the next 1 day and 21 hours, it just goes straight up over here and closes over the top of everything, but I just don't see that happening. And tomorrow we have 1 day, 4 day, 8 day, 16, 19, 38. So let's just have a quick look at tomorrow. 1 month, 2 month, 5 month as well. Let's see. So what does that 2 month look like? So we might get a 2 month close over the wick of the whole candle. We've already bounced between those two levels. So this is the kind of thing that can close above here, have one more dip, and then could go as high as 149, just purely based on horizontal structure, not taking anything else into account. 5 month. Oops. Yeah, 5 months really got nothing going on. Maybe a trend. Let's have a look. Yes, it's under trend. Yeah. It doesn't matter which way you look at it, it's under trend. So it's not really helpful. And 2 day, 4 day, 8 day. No. 2 day, 4 day. day. Sorry, I'm looking at the wrong thing. So all we have is a 3-day and a 101 day. Oh yeah. Yep, yeah, I'll cover those. So there's our 3-day for tomorrow, which hasn't well, doesn't close for a while, but just don't want to be below the wick, which is 110565. Don't want to be below the body, which is 110964. So if we're below those two levels tomorrow, then you'd expect another bounce down. So this might have already played out. Let's look at this from a... Oh yeah. We may also be heading back up to 15. Yeah, 115. Can't be everyone. Okay, so let's look at advanced hold levels. Okay. Okay. So let's look at that 3-day one. It's kind of happening now. An advanced hold level is a candle that's on the backside of several accumulation candles. It can get created by something like the body engulfing the body. Better if the body engulfs the wick completely. But basically it's one candle with several in front. What you've got to do is refine it and make sure you have some kind of other level inside of it, because you don't know whether this candle's gone up and down, up and down, up and down several times and already kind of eroded everything inside there. So, or more so that one. In fact, let's try to find a really bad one. We'll try to find a really bad one. It should be bad. Okay. Yeah, that's probably a really bad one. So let's find. So you'd be looking for level inside there. Okay. So straight away, you can see down the bottom here, you've got your daily level inside your 3-day, but your daily level's already been tested. So that's straight off the bat, you know that's not good. We've got this kind of right at the front of it, so we could come across to there, and we could go down to our 4-hour, and we've got this 4-hour level, but it's been tested by this candle back into there, and the wick has been tested by this candle, so that 4-hour level is pretty useless. Then we could go, say, try our 1 hour, and the 1 hour level has been tested by this. This one is kind of like an advanced hold level on its own. This has been tested, this has been tested. This has been tested by that one. That's been tested. So everything's been tested. You could go to maybe this, just. Although that doji is a scary sign. Go down to 15-minute. And kind of got that. So that might be it. You've got like this one little 15-minute level inside a 3-day candle, and that's kind of the only thing that might hold it up in the future. So that's a pretty bad one. And then down here, you've got the origin of the range. So if you were to enter, which we could see if we looked back at that 3-day, go back to the 3-day chart now. All the way down in here, you've got a level, but it is not in here. And that's probably one of the main things you sort of look for, is that it's actually not in the original hold candle. It's all the way forward, so it's probably not going to hold anything. You might get a daily move, or there might be something else that's in this candle, like a totally different hold level, but it's probably not going to hold anything. This level down here being the origin of the range, that would probably support the price. And hence, if you had just taken a order up here at 86k or whatever on your advanced hold level, you'll probably get completely screwed. So yeah, so that little level inside there gave us a bounce, decent one, but it didn't go to the target. The target was up here, 92. So, and actually, just as another little lesson, if you get a hard closed candle of the same type inside a hold level, revise your target, revise it to here, because quite often then what happens is the top of the hold level becomes resistance. So you basically go up, you create this advanced hold level, you close back inside of it, which means the top flips to resistance, you reject off it, you find that tiny little refined level that's all the way inside here, you go back to the resistance, and then rejects again, comes down, finds the origin of the range. The origin of the range is going to target a break level. So basically, you've got that as a break level, and you've got that as a break level. So now you could take this trade and look for a minimum to there, but it's probably going to go there. And just the reason why you sort of know that is because, as nuts as it sounds, when you put a fib on that candle and it kind of lines up with the break level, you know that somewhere in this there is going to be something that kind of triggers to go to that level, and otherwise they just wouldn't, those levels just wouldn't be so close together. And yeah, job done. So that's like advanced hold level, and that's a really crappy one that was just set up to fail from the very beginning. And it's kind of why you don't just want people to look at that indicator and go, cool, I'm gonna long this level, because you've got to know how to look inside of it, and you got to know how to find the levels, and you got to know that because this happens before we get to this, that you change the TP and change the trade. Yeah, sort of. The whole double down on those sort of levels is kind of just it's based off a whole heap of back testing and just finding the least risky things to do. If you I just joined your server reacted also. Where do I see the rules channel? Hold on one sec. What's your username on Discord? I think I know how to get you in there somehow. There's a button I can press or something. Members settings. Maybe. Oh, there it is. Members. Just join choose. Okay. Filter by past. Malu, let's see, Mario. Can't see can't see in there. You definitely in definitely in the FibLab Discord. Oh wait, my bad. I got it wrong. Oh yeah, I see you there. Your showing is verified. Put you in as Fib Apprentice. Did more if let me know if more channels just popped up. You should be in there now. Yeah. I only figured out the other day that you can actually assign things to people. So I could just force everyone to get notifications when I tweet. Oh, the madness. Okay, what was that question? Yeah, so that's a really bad. That's an example of a really bad advanced hold level. A really good advanced hold level. Something like this one. Just when you look at them from an outside perspective too, you can kind of just look at the gaps between the other candles and the top. So without even drilling down into it, you can sort of tell that the area between there and there. So if we get rid of the one that bounced off it, the area between there and there is probably untested. Okay, there's probably stuff in that. This candle coming up and coming down would have tested a lot of stuff that's already in here. And so that sort of gives you an idea. You're probably looking for an entry inside that spot, which is there. off it goes. So there'll be something in there. So nothing there. Nothing there. That. Right there. Yeah, what's Sol up to? Yep. So rejecting back down. So this is an example of some kind of range trend that probably exists in a slightly different time frame from there to there. So let's have a look at no. What's that one? Nope. Yep. It's that one. So whole candle, blue candle into yellow, can't create a range trend. Yellow candle into yellow, can create a range trend. Failure. Which looks kind of fractally like that. Yeah. So yeah, just when you see one candle like that, doesn't actually mean that there isn't a range there. It's just the range is going to be a lower time frame from the one you're currently viewing. In this case, it was a annoying 3-minute range trend that rejected the price. Right. So we've had this. Okay, that's it. We've had this liquidity coming down here and got some more coming in now. Okay, so might be able to get a scalp off this. Except it already bounced, so no, let's not do that. probably just keep an eye on that 4-hour. So it's got a long time to go on the candle, but if it grabs a bunch of liquidity, it opened on the top side of that origin level coming through there. So if it grabs the liquidity from down here, it's probably going to try and target the 199.8 or the 201. Yeah, the fans always get super loud whenever the whenever the price starts flying. Okay. So might bounce off the top of the range trend even. It's organic when it goes the way you want it to, and it's manipulation when it doesn't. Do origin trends have a expiry? Sorry, do origin levels have an expiry? Not really, unfortunately. They do have kind of like targets, which is, and there might be a way to figure out an expiry, but haven't quite dug that far into that yet. Yeah, we had yeah, there's a lot to be learned from that pump trade yesterday. So it ended up, you had a 4-hour hold candle, you had a target, you formed polarity. If you'd played the trade right, you would have been able to take a long, or actually take profit on your short before the short had completed, take a long, take profit on the long, re-enter the short, and also um, also it showed why you should also keep an eye on the spot chart as well. So it's quite a lot of learnings in that one. Yeah. Okay, so this was the that was the 4-hour chart. That was the candle that was being shorted. This was the target down here, but before it could reach the target, it created a hold level on the other side, being this one, and then it made that bounce as if you were then taking the long. Great, yeah, we've just grabbed that. We've just grabbed that liquidity, and also you can see the target didn't quite get hit when you look at the perp chart. But if you look at the spot chart, See the target got hit. So it sort of gives you a bit of an idea that some moves are created through perpetuals, some moves are created through spot, and the prices kind of roughly line up. But in this case, clearly it was spot buying and selling that was pushing the price around, and hence why you want to keep an eye on both. And as far as identifying polarity, well, that's before this candle actually had closed, what was happening inside, and we'd done this, we put this little box in here because it was getting close to the candle close, and we were saying if this price doesn't get below this box before the 4-hour close, then you're going to want to take your profits, close your trade, basically, because it's probably going to bounce in the opposite direction and it could end up higher or stop you out or invalidate the short. And so when you look at that from a low time frame perspective, what you get is it just kind of bouncing along here, just won't go down. And sure enough, 4-hour close comes along and price goes up at some point. It'll bounce off at first, obviously, but yep, that would have triggered it. And off it goes in the wrong direction. And then, of course, it hit its target and it came back down here later, but there's a little bit more of a detailed version of that earlier in the live stream if you catch it, or replay it afterwards if you want to see even more detail and all that. But back down to trend again. It's a nice dive. Yeah, I've got a little bit of Sol left open. I didn't TP everything. Asta's already TP'd. I don't think I have anything else. Oh, a little BTC trade. Nothing much else. Nothing big enough, basically. They're leverage trades, but they're just the size of spot, really. Just kind of waiting for another scalp opportunity. Could be. What we're really just doing is just more of the same of yesterday and the day before and the day before. We're just staying in a very compressed kind of range. This might bounce the trend again. Maybe. It's got 3 hours and 43 minutes to go on the candle, so it could do a bit of a sweep and come back, or somewhere else. Could come down here. One. something with like a candle like that would be a great one to take a trade on. It's just so clean, right at the bottom of the range. But I don't think it's going there short term. Same with this. Do you convert all your trades back to USDC? Yeah, at the moment, USDC. Yep. We're not really. We're pretty far into the bull market if you consider a normal cycle. Like so far, and we could be in the bear. So yeah, I got rid of basically every spot asset between yeah, I got rid of basically every spot asset between 108, 114, and then took a couple of buys, OTC buys at certain times when we had big dumps, and just rode it back up. Yeah, for eight grand, I think I rode BTC up, and then just sold it back and put it back in the bank. Yeah, the dailies hit the daily trend again, rejected. So it's either just gonna be more boredom, so stuck in here like this. It could come back here and find support, here and find support, here and find support, here and find support. So you could just be cheeky and have buy orders on these lower levels and just see. You might get a tweet and it might wick down and then bounce back up again, or it's just going to keep bouncing around inside here. No, it's not that I think the bear is happening. I just think that there's just a certain logical point, which is normally about a ratio of 5. So if you said the bottom of the market just approximately was 20k, then what you would do is you'd say like 100k is it for that cycle, and anything past 100k is when it's probably going to get choppy and crappy and just and the bear market could happen anytime. And it's just not. It's like not being greedy really. If you put a sizable sum of money in at 20k and you've times it by 5, that's enough. But also you've got a long bias that entire time, and so you're taking a leverage trade and you're making money. And then if you're using like a lot of exchanges, centralized exchanges unfortunately, but a lot of exchanges allow you to use some kind of asset as collateral without converting it. So when you're on a DEX, if it converts the collateral, the problem is that when it buys it back again on a long, it's at a higher price. So you haven't really benefited from that. You sold your stuff lower into a stable to use as collateral, and then when you made profit on your long, you didn't really make a lot of profit on your long because you've also just lost the profitable gains on your collateral. So, but with a centralized exchange, a lot of them you can use the collateral and it stays in its original form. And there's risk to that because if you were to do that in the bear market, you'd get stuffed because the collateral value would be dropping as long with the price that's dropping. So if you longed in the bear market, you'd have this double negative where your collateral lowers as you go into drawdown on your long. If you're short, it doesn't really matter too much, but then you're also losing value on your collateral. So why the hell are you still holding it as a volatile token in a bear market? It doesn't make sense. It doesn't make sense to hold BTC. Maxis do because they're maxis, but it just doesn't make sense. They're proud of the fact that they rode their BTC from 64,000 back to 15 and then all the way back to 100. It's like, why are you proud of that? You're an idiot. Sell it at 60,000, sell it at 50,000, buy it back again at 30, even if you get it wrong, even if you miss the bottom, doesn't matter. Just buy it back less than what you sold it for. But yeah, when you're trading with collateral in a bull market, you take your winnings from your trade and you convert them back to the token that you know is actually going to appreciate, and then you put it in as further collateral for your next trade, and then you keep doing that. And then naturally, as time is moving forward, you're actually building the asset which is appreciating in value. But you have to draw a line somewhere and you say, okay, well, when it gets to, like in my case, it was 108K, I started laddering it out. I said, well, I'm going to sell it there. But you've also got to appreciate the fact that I would have made a trade at 25K, made profit, converted it into more BTC at 25K. So therefore, I'm already, the valuation of my trade winnings is actually going up as well over that entire period of time. So it's not just the base amount I started with at the beginning of the bull cycle. So therefore, you don't need to be as greedy when about finding the actual top, because if I just bought it and held it, I probably would have ended up with less than trading it and adding to it. So yeah, and where we are now, we're really not, like if we look at, just zoom right out and look at BTC on the monthly. So this is our monthly range. We've hard closed the break, and then we've just been in continuous consolidation since. So there is no range up here yet. There's no there's no real signal as to whether that goes up or down, which is why the entire market is confused as to what comes next. So I wouldn't be holding spot assets through that, not until there's some confirmation. And if the confirmation happens to be that it's going to dump, then you'll be pretty happy you didn't hold them. And if the confirmation is up here and it hard closes the top side properly, then it's going to go a lot higher. In which case you just buy them back, and you wouldn't care that you sold them a little bit lower and bought them a bit higher. Yeah, this is not a bad level to be looking at Aster. It's still stuck under that trend. But it should be about to hit this one. Yes, anywhere down here. Start building something. And then you got these two range trends down the bottom here, which should bounce. Let's see. Sometimes. ETH. Not terribly often, but okay. So BTC is going on a dive to grab this lower liquidity. Shows kind of SOL quite good relative strength at the moment against BTC. How long that lasts, but it's good at the moment. 108.8500 on BTC. I think it might actually go for a bigger dump, looking at it. Yep. Okay. Let's see if we can bounce. This is a little bit dangerous to be trading this right now with BTC going on a nosedive. As much as these are potentially very good entries, if BTC just keeps on dumping, then alts kind of have to follow. It may also turn into a bit of a longer position. Worst case, if BTC really goes to crap, what you'll end up having is a trend shift to the bottom of whatever this blue candle is, and then a bounce off the trend. Well, BTC just went below 108.350, which is the weekly support. So it just wicked below it, which doesn't matter as long as it doesn't close the week under it. But if it closes the week under it, then it's game over and it's going to definitely go lower. Okay. So what we're looking at on this is just a bounce off either of these range trends. Maximum would just be back up there to the hold. Things that would disqualify it would pretty much just be closing underneath trends, because then it will just reject off the back of them and go down. the Asia Pump manager got fired. Good call. Back down to the support. So if you're looking to enter on Sol, entering on the daily candle here at the bottom of the range is pretty much about the safest bet. So somewhere between 185 and what's that? 185 and 181, somewhere in there. if it goes there. And if it doesn't go there, then it's just illustrating once again that it's trying to build a range with this here as the floor. And then that's your next levels. So much time to go. This trade might not complete for 7 hours or more, unfortunately. Okay. Hey, hit the like button. Netflix and chill, yeah. That's kind of that's how it gets sometimes. Might go up. I mean, just about every man and his dog chased that short on Sol. Like the liquidity just came in almost instantaneously. Check this out. Look at all these people who just opened high level shorts. They're all just getting destroyed now. That's the so it might bounce back up. Same thing. Everyone's so eager for BTC to dump that when it starts dumping, it's just open shorts, open shorts, open shorts, and then bounce. Up it goes. Up it goes. Which means our very typical Asta just did a first touch range trend bounce, which is what it's doing now. Trade. I'm in profit. Yay. Yep. So other things you can kind of do is like it's not just BTC that kind of drives the market. Most tokens, most of the bigger market cap tokens kind of move together. So if you don't have to trade ETH, but you could watch ETH. You don't have to trade Sol, but you could watch Sol, you know, that sort of thing. And if there is a really clean structured move on one of the bigger market caps, there's a good chance that all others will follow it to some degree, even though the structure might not be so clear on those other tokens. So you can pick the most volatile poo coin and just long it as a beta to, whatever the more obvious, clean, larger cap token long would be. So there's other, stuff you can do like that, which is what we were doing that other week when we were like trying to figure out. There wasn't really any structure to Sol at the time, but there was really clean weekly structure on ETH, and it was, we don't really want a long ETH because I'm going to make more money on something that moves more. But it gave us an idea that when ETH hits this price, we want to close our long on the other tokens. So that was. See what Esther. Should probably be watching this on a lower time frame actually, eh? Okay. All right, so it's probably going to come up to there if we can close back above trend. Cool. So got a range trend, got a hold level. So we've closed back over top of the main trend. See if we can get back up here. Why that specific bottom wick? On what? On this 12-hour Asta chart, that hold target there, would you be able to clarify why that's the target exactly? Yeah, because trends bounce to holds. Same reason this is probably going to come back to here as part of the range structure. So if it closes under this trend, it'll probably come back here. Same reason. So here is an example. This has got much longer to go, because it's 7 hours to go, but bouncing off this trend or any of these range trends down below here should target the hold. It's just there's a long time to go on the candle. So yeah, trend, 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 hold. Unfortunately, time. And so this is the capitulation part of candles. They can just sit here for 7 hours, get everybody bearish and opening shorts, and then bounce back up afterwards. The only reason this even moved back up a little bit straight away like it did is because everyone already rushed in with shorts. And so it went up and took them. Will you not take the backside hold if the holds wick has been touched. Wow. Do you mean this one? If it's been touched by the candle that created the range, which is this second candle made that range, that generally means that this whole candle has not been hit, because it's not a whole candle until you have a range, and you don't have a range unless you have two candles. So if it's tested by the second candle, it's not actually tested because it wasn't a hold, if that makes sense in a really cryptic way. You can't test something that's not a hold. So you could probably, instead of watching this on the 12-hour, you could probably watch it on the 4. So that's your 4-hour range trend running through here. And you've got your hold. At least you don't have to wait 7 hours. We're up to here. So that would have been the hold move if you'd just taken just the hold move. If you'd taken the lazy entry, 2.46%. So if you took one 4-hour hold move, go jump on a compound interest calculator and put in 2.4% daily on your, just on say spot. Don't even think about leverage. Just 2.4% daily on spot, and you just take one 4-hour move like that each day. Gets pretty big, pretty fast. And that's without really even introducing a lot of risk. Sol's got a daily hold, but we haven't gone anywhere near it. So I think everything there has been tested. Sol's got things like origin levels, etc., which it's bouncing off. Nah, that was the hold there. Been hit on the 4-hour. That bounce. Sorry, that was a 1-hour. What was that? That ended up going 5 point. Took a long time, but that ended up going about 5% by the time I got to the top. That's why you can retire on Asta. It only took a couple of little candles and it did half of that percentage or more. So the 4-hour doesn't have a hold till you get That's 8. What have I done with my timings? 4. No. No, there's not until you get all the way down here. Should be inside the daily. I mean, that could get bearish. Could close down and create a hold to the downside. So a daily hold targets like a daily time frame trend. Yeah, so a daily hold will target a daily trend, and if there's no trend kind of in the way, then it'll target another hold. Yep. And if there's no other hold, it'll target a break. It basically just goes to an equivalent, whatever the equivalent form of resistance is first, either a trend, a hold, or a break, or it runs into a 4-hour origin. This looks like it's trying to break down. Hurry up. Good old 3-minute charts. So normally what you want to do is you want to look at, like, we're about to hit 5, which means we're going to have an hourly close as well. So this is where you flip between your time frames and you go, what does our hourly structure look like? So you're looking for the biggest close on the moment that's about to happen. So our hourly looks like it might close on Sol below the origin level. So it's quite important that that hourly actually gets back up above that line. If it doesn't, there's probably going to be a further dump. They always just stuff around right on the line to the very last minute. So, but there's multiple sort of semi obligations this candle has. Like number one, close back up above the horizontal level because it's dived through all these trends. Number two, it should really be trying to pull its way all the way back up here. No, an hourly close can't break a 4-hour origin, but an hourly origin can break a 4-hour hold. Let's have a look. Well, it just bounced off the daily. Should have really had a buy order sitting there. And that's down on the trends. So the 2-day move is already complete, which was from that rejection to that support. So if it bounces off the trends, it'll come back up here to the hold. So if you look at that, where that is on liquidity, that would be there. That. So see the cursor here. So we take it up to the hold. So the wick of the hold is this, exactly that little band of 100x leverage there would be the wick. And then the body starts up here in the 50x area. So you're bouncing the trend, should try to target the holds. Thoughts on yeah, we could get a little October 10th rerun, absolutely. Thoughts on ENA? Monthly looks pretty sad. Weekly origin support, 25 cents. You could just put a cheeky buy order at 25 cents and see if it wicks to it. Some kind of stupid tweet action. Top side of the range is still 80 cents. So daily doesn't have a support level. Kind of that. No. So it's below the daily break now. What you could do with this is put alerts on any of these daily levels. And if one of them converts into an origin level, you could then take the trade off it on the first bounce and target whatever the top side origin is, which is that. It's not a huge trade really, but the other thing you could do is wait for a hard close over that and take that. Yeah, Sol looks pretty crappy. BTC looks crappy. Asta's not really bouncing. Just losing that 3 minute. Yeah. It's all just noise really for the next 3 hours. Okay, so look at that hourly close. Yep. Under trends, under the range trend. They hate this thing. Sol does not want you to have nice things. Unfortunately, the area that it's in is packed with various support levels. So you can lose a level here, but still have levels here and here. And they're all within 0.35%. So this kind of compression then leads to the price sometimes just getting stuck. Like it's really hard for it to move because it just gets trapped in this stupid little range. It can also make it quite trappy because it could push all the way back up for the next 50 minutes and then end up pulling all the way back down again. So it's just, I think it's why a lot of people are getting really frustrated trading at the moment. What's APEC 2025? What's the impact of that? Yeah. Interior trend on the 15-minute. Look at all these 15-minute levels. Just so now it's got to get through this trend before it can really even do anything. Yeah. Yeah. You can sense it just in general. And oh, okay. It's that meeting thing. Yeah. Yeah, you can sense it in general. People are kind of over it. They almost just want it to either just dump or pump, but just stop being completely compressed through the middle and doing nothing effectively. Same couple of dollars all day long. But you could kind of tell at daily close it wasn't going to be so flash. The fact that they just sold it all the way down again and opened it in this area here. It's just, they could have sold it up, closed it at the top here, broken over the top, gone up. But they could have also sold it down under the trend, sold it down under the range trend, so under any of these levels, and then had a real nosedive. But they didn't. They just put it in exactly the position of being annoying. Let's have a look at the Sui trade. Oops. Nah, Sui didn't close over the trend. They pulled it back under the trend and dumped it. So just all they had to do was drag that candle down, and it's game over. Where it's at now, though, is not a train wreck. Like, it's dived through two range trends, so it's no different than Asta. It's probably just going to stay down here and get people to capitulate and then move back towards the end of the candle. Yeah, it seems to have disappeared. I don't know. So there's probably other websites out there. Yeah, 185 or lower. I mean, you could start building longs now. Or just wait a little bit longer towards the candle close and just see what they start to do, because it's just daily. That's 43 day. Yeah, so this is probably the one to watch. See if they create that hold level. And if they don't, if in the next 2 hours and 52 minutes they start dragging this up and not creating a hold level, then you know what they're doing. They're basically faking it out and going up. they're also going to create a range trend on the bottom here. So if they start pushing down to try and get rid of this wick, then you know they're going to try and break it and then head down. At the moment, you don't know what they're going to do because everything about this candle is just psychological manipulation until it closes. At this stage, I'm not looking at 170s. Not to say they won't happen, but there's really nothing to say we're going there. We haven't even hit the daily support hole for the range, so it doesn't make a lot of sense to be thinking about 170s at this stage. They're kind of outside of the scope. Although BTC looks sick, so that's the problem really. BTC looks like arse. And while BTC looks like arse, it's pretty hard to say what an altcoin's going to do. What's a rare earth news alert embargo? What does that mean? That they're going to share rocks with each other again? Rare rocks. How deep could it all go? Well, don't know. On Sol, it would be. So really on Sol, the levels of polarity are 190.753 and 200.579. So if it just never lets it go over that 200.579, say it starts to pump, but it just keeps tapping that and never just does not let the price go above it, then that's because the intentions are to make that hold level, and we're probably going to dump next month. Same thing could be said for 190.753. If it just continuously, if it goes below it and then just continuously stays below it and just won't let it go up, then it's probably going to dump next month. That's about all you can tell. As for anything else, it doesn't technically create this new range trend until the end of the month. So this level, which is about 148, will come on the table if it creates this hold level. And if it doesn't, it's not really on the table. It'd be pretty unusual for them to front run that because it isn't technically there yet. Yeah, if it creates this hold level, you'll be building along at 140 something. Or you'd just be looking for shorts until it gets there. Yeah. So the absolute perfect way for a sustainable future for Sol is to close between 200,579 and 208,597. So the candle would be blue, but it would not have a hold level. And then the next month, you would want it to close over 249.260. That would be the perfect sustainable structure for the monthly range to be formed on SOL. Check what Farcoin's up to. This might have some levels. So Farcoin's bouncing on an origin level. Yeah, it has to close above the bottom of the last month so that it doesn't create a hold level, but you want it to still be blue so that it creates further trend support for the future, as well as can be engulfed next month, which creates a hold level, which, if engulfed by a big ETF boom narrative, blah, 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 then also creates the base of a range. And then we can think about 300 plus. So that's your bullish case. Bearish case, it makes a monthly hold level, C at 142. Yeah, that's not bad close. 15-minute. It's on the top side of all that support resistance, and it's on the correct side of the trend. If it can hard close a yellow candle, then it can break the trend. And once it breaks the trend, it targets the hold. This backside of this is already tested by this candle, so the untested hold's up there, and then we're going back up again. So it's not too bad. So if the 15-minute breaks the trend and starts moving up, that pulls the 1 hour candle back up and stops the 1 hour candle from hard closing any of these levels as resistance. Then the 1 hour can take over, bounce, and start heading up. I reckon it's pretty likely you get to 105, even if it's just a wick. Even if it's next month. Because if they have intentions to make a monthly range next month, they'll probably dip down and grab all of the liquidity before they go up. So if there is going to be that crash, it's going to be pretty close. It's either going to be now or start of next month after they can, well, after they confirm the structure. The other way is true as well, by the way. If they make the hold level, they might still wick up and grab everything up to 120 before they then roll over and go down. Given how close that liquidity is, I don't think they'd leave it behind. It's so close. And it's so thick. Like it would just be a cascade event, so easy. Yeah, friends don't beat you. They're not friends. Okay. It's Asta doing. Yep. Doing its thing. Two hours and 40 minutes. So if in 2 hours and 40 minutes this hasn't got back up above the trends or above the break level there, then it's probably going to try to dump again. But it could do it literally in the last minute if it wants to. In fact, it can still dump on the 4 hour and then recover on the 12 as well. It's too early in the day for it to be doing this kind of stuff. Good morning. So we got an interest rate cut, so the market dumped. I bet if I went and looked at Marty's Twitter feed, he'd be screaming manipulation. Big tech stocks like Meta. Yeah, I saw it. Didn't Meta like drop 10% or something the other day? I'm not from this planet. Yeah. Yes. You just imagine a conversation with that guy, eh? Like, if you knew it was coming, why don't you 100x it? Because then they'd hunt me. No, they wouldn't. Yeah, that's my buddies. They're arriving today or tomorrow. Gonna sit down in Korea. Uh, Not on days like today. Definitely not on days like today. You can only really do it when market makers are fully involved, like, and spread is much tighter. So like a couple days ago, there would have been probably a whole bunch of withdrawals from exchanges by market makers. Marty would have probably been tweeting that they're going to manipulate the market and they're going to do this, they're going to do that. But all they'd be doing is they'll be taking their liquidity out because they don't want to be at risk of getting, you know, out of balance. And why would they do that? Because there's some kind of macro events, and all they want to do, like all a market maker does, is they want to sit in between you and somebody else. And it's funny that when people think that when they're trading, there's always a buy for a sell and there's always a sell for a buy. But very rarely is it actually another trader. It is usually you buy here from the market maker. The market maker then wants to rebuy. So they might want the wick just to come down just a little bit so that they can rebuy off somebody else. And that's it. And it's just that tiny little spread because they're not paying fees, like they're in return for the fact that they provide liquidity to exchanges, etc. They don't pay trading fees. So they just want this tiny little bit of spread. But they also don't want to have all of their assets sold or at a really low extreme, and they also don't want to have to buy back a whole bunch at another extreme. So before days like today, they will pull their liquidity out. Now, unfortunately, that means they're not here. And if they're not here, then the spread gets bigger and the volatility gets bigger. So it's kind of a self-fulfilling prophecy where you actually the almost like Marty blames the market maker for doing this. They're not actually doing it, but they're actually the fact that it's a risky time means, and they're protecting themselves means that it can happen. And in some other markets, there are they have insurance, they have obligations, they have other things like they would have to guarantee that they always provide a minimum amount of liquidity and stuff like that. But most of those agreements don't exist in crypto, so they just don't have to. They can just, if there was, the president was on his deathbed and the market was going to either pump or dump because he survived, every market maker in crypto could pull all their liquidity out of everything because they just simply don't want to be at risk. And that's perfectly allowed. And it's the kind of thing that happened on October 10th. You just had, there was a lot of macro stuff. They took all their liquidity out, or a lot of it, and people took advantage of it. Further to the above question, what leverage do you use? It's not a complicated question, but it's just I don't really have to use a lot of leverage because I, generally speaking, am only taking about a 1% risk on all trades. But the answer to leverage is if you do not have enough funds in your account to take a trade where the risk dollar value, it's hard to explain this. It's probably easier to show you. Okay, so if, for example, you wanted to take a trade on this candle and you were going to enter here. So you're going to enter here and you believed that the price was never going to go below here. And your risk for your trade is, say, $100, right? So if it goes below here, you're going to lose $100. Okay. Now, maybe you wanted to take a TP here as an example. If this was $100 and you had $10,000 in your account and $100 was 1%, then you wouldn't need to use any leverage whatsoever because 1% of $10,000 is $100. You're not going to use any leverage. If you had $100 in your account and you wanted to take this trade, you'd pretty much have to put your entire trade in. Now, the amount of asset that you're going to buy in this position to create this trade means you'd need more than $100, so therefore you would be putting 100x leverage in and you'd get completely wiped out. Well, you wouldn't have in this case, but I don't know. That's not even a really good way to explain it. Do I still have that video? There's a leverage video on my YouTube thing, eh? Please hold caller. So I made a YouTube video that explains this properly and coherently and has examples. And it's using a particular website that doesn't exist anymore because it seems to have gone, but and search for leverage. Okay, leverage trading. Should you why? Here we go. Copy. Just going to paste it in the chat for you. There you go. Watch that one. It explains it way better. But yeah, the short version of leverage is if the risk at a certain distance between entry and stop loss falls outside of the size of the position required to create the risk, then you would use leverage. So that's all. That's it. It's all about position sizing and risk and entry versus stop loss. So there are advanced reasons you may use leverage to do with freeing up capital once you get a position that's really, really profitable and miles away from your entry. So you might, instead of realizing the profit, what you might do is you might say, have a position that you opened up at 1x. And aside from fees, and this is this is kind of all really advanced stuff, but say like at the beginning of the bull market, if you're going to open a position on something, you could open it on leverage at 1x, and then once the thing is like 2000% up and you're miles away from ever going back to 30k, you could increase the leverage on it to like 100x, and you're miles away from your entry. You could set a stop loss in profit, and then because you've just dialed the leverage up on it, you've freed up all of that collateral to then use to do other trades. So there's other reasons why you might start with leverage trades and then adjust the leverage, but you need to have certain platforms to do that. Can't do it on everything. Yeah, it's a bit of a double liquidity grab. They got everybody, and then they got everybody that chased the pump, and then now they're going up again. Yeah, so you got this going on. So structurally, Sol's very, very, very strong at the moment. It keeps repetitively hitting its break level, so it's not converting it into an origin level. It's actually quite bullish. Like it hasn't broken it yet, but it's not making it into stronger resistance, which is um, quite bullish. And you've got things like the monthly. So the monthly has been in a bit of a dive below the range trend and below the break for the whole month, basically. But there's almost a bit of a bungee cord effect on candles. Like as they get closer to the end of their period, they usually start to pull back towards whatever they've pushed through. So it's possible that the next couple of days you just get continually stronger price action out of Sol. Um, but it's worth watching, because if it actually closes under this level for the month, then not only will BTC, if BTC closes under and creates a bad monthly hold level, and Sol closes under here and creates resistance back under the range trend, and back under the break level, then what you'll actually see is a amplified dump on Sol compared to the dump that will come on BTC. So the strength that you're seeing now could flip depending on how this closes. The absolute bull case with this is that this creeps all the way back up into an accumulation candle prior to the end of the month, in which case it will be a hard close of the range trend, and then it will bounce off the top side of the range trend and come up here and attack the topside trend again. So it's in an interesting spot for the monthly. And the daily is sort of showing just continued strength. Got hold levels, it's holding trends, it's on the correct side of the downtrend to break it. If at the end of the day this thing is up here and has no wick on it, then the trend will shift to the top, it'll be over the top, and it should be able to pump again. So it's and you got BTC dominance and risk asset or safety assets is kind of stuck in between these trends, so it's just a bit of a mixed bag at the moment. And this is dived through the trend to hit the hold, which means usually by the end of the day it will have retraced back up to the trend or slightly above. So there's most of this just looks like liquidity grab. unfortunately, they don't usually just go straight down, straight up. They usually hang around for a bit and get people to capitulate and then scream bear market. And then closer to the end of the day, they go up. Yeah, it's pretty unlikely. 180 maybe. It's pretty unlikely you see 170 today. Pretty unlikely. It would have to basically disrespect quite a bit of stuff to get to 170. Yeah, so even this, structurally, this trend should come back to that hold. But they can hang around down here for 2 days. And this is kind of the driving force, I think, which is why we're still going down. We might have, you have hit the target now for that. So this is a 3-week short that kicked in a while ago, and we've just hit the target for that probably today, actually. So that was, yep. So 1, 2, 3 days. So that 3-week short has basically been playing out over the last 3 days. It's complete now. And we've got a 3-week origin level sitting right here at 107. So if we tap 107, that's a 3-week support origin level. And I'm pretty sure a 3-week, it was either a 3 or a 4-week support origin, sorry, resistance origin that created the October 10th dump. So yeah, short version is like everything that's happening now is just stuff that we've talked about in every single video over the last God knows how many days, weeks, etc. have I been doing videos? Yeah, that was dum dum. Um, yeah, yeah, it should go back up. So when I talk about trend diving is when a candle disrespects a trend, goes straight through it, finds a hold level or a horizontal level, and then it can do a couple of things. It can bounce back, or it can hang around, get people to capitulate, and then go back up later. One of them, so if it just dives straight down and goes straight back up, it's really bullish because it's trying to move the entire of the liquidity layers up higher by getting people to chase it. And if it hangs around and for capitulation, then it's a bit more of a mixed thing because it might hang around to get more liquidity underneath and then have another dip. Or it could just be that there was not enough positions filled by the the dump down. So and they're just trying to fill their bags up a bit more. So but yeah, we should be back at that Asta $1 level soon, I'd say. Hey, here we go. So this is classic trend dive. Straight through all the trends, into the hold level, come back up. And TP 10, 9, 8, 7, 6, 5, 4, 3, 2. It could even come back up above this trend, but I'm just going to TP this at the psi number, which is like $1. Just see if it rejects off the psi number. These dotted lines here, these prior trends, yeah. You can see it retested the prior trend perfectly. Yeah, that's just me being selfish. I just don't really want them to be bright and and it's so hard to even have this amount of stuff on my screen. Even this triggers my OCD. See if it taps the psi number. $1. By the way, you should never set your TPs at round numbers. Just they psychological levels often reject. If your TP size is quite big, you might not get a full fill. This is actually quite funny. Binance will not go over $1, whereas BitGet's already gone up over $1. Favorite tools in TradingView. Magnet tool. I'll show you some, eh? Just gonna sneak out of this position a little bit. Come on. Seems crazy. You can't even get, like at the moment, you can barely get mid 5-figure limit orders to fill properly, even though there seems to be a lot of volatility and price action. It just doesn't want to fill. It's all bloody algos and bots just moving minimum dollar value orders all over the place. Piss off. Okay. And I'm done. Yes, short version. Going to well, what I did actually was just scalp Asta because it moves more in the same period of time. Although that was a little bit hard to get out of it. So, I wonder what that looked like on the 1 minute screen. Asta. Oops. Asta. Let's find that Asta one. Okay. See this gap? The algo's just jumped. This is what happens when you have a really large order that you're trying to TP, and they will not fill your order. They just sit there going nope, 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 and then you delete the order from the order book, and it just goes woof and just jumps straight up. That's how you fuck with candles. And then you get out through here. Anyway. Let's put that back on. What made you change your candles? So yeah, let's look at some TradingView stuff. I'll explain that at the same time. So certain things about TradingView. One is the ability to right click on the back here and go settings, and you can change your colors for your candles. And I'm actually going to change them again. I'm just slowly trying to mentally wrap my head around changing colors because I've used these for so long. But I've got some, I'll just find them. I'll do it now actually, I'll show you. Right. And you can even add custom colors. So instead of using such a bright yellow, which after 10 hours of live stream with all of you lovely human beings, can be quite hard. So you can come in here and you can actually add custom colors and put the hex codes or whatever they call it in there. So settings. Oops. You got to click in blank space, otherwise you'll get your indicator settings. I'm going to change the body to that one. And I'm going to change and my wicks. I don't want outlines around my candles. Some people do. I can't stand extra lines, so I'm just going to do that. Got enough lines on my charts as it is. Don't want borders. Turn it off. Okay. Canvas. So a lot of people have, you can have gradients, colors. There's lines that you can put through the background. I mean, I just tried to keep it as simple as possible. Just, keep it really, really, really simple. I'm just going to paste, what I'll do is I'll just paste those hex numbers in the chat for you. So this is, that's yellow. And this is the one for the blue. So these are the new ones I'm going to start using. So I was talking to a very, very smart man who does graphics design and marketing and something. And apparently these two shades are some of the best shades for your eyes, whatever. The core reason I do not want them to be red and green is because, like most people did in their lives, you probably learnt to drive, as an example. You probably learnt that stop signs are red and traffic lights are green for go and red for stop. And whether you consciously realize it or not, but if that is the case, and if that is the way you grow up, when there is a big bloody red candle flying down to the ground, and you should be thinking at that point about finding an entry, you're going to stop, right? And you're not going to do anything because what's happening in front of you is a big red candle, and you're subconsciously going to stop. I just close my eyes. Yeah, exactly. So, and of course, think about like inducing people to chase the pump, like big green candle. What are you gonna do? I'm gonna be the guy that chases the pump and gets and gets stopped out later when they reverse back into me. So so yeah, I don't want um, candles that are red and green. So it helps you just be more chill, more calm, make better decisions. Um, and maybe not everyone's brain is wired that same way, but that's how mine is. So this helps me. Um, these new shades, I can already tell looking at them, are much easier on my eyes. So I'm going to be migrating my charts to that over time. Yeah, I got over 1,400 templates, so it's going to take a while. Now, tools, magnet tool. Weak magnet, strong magnet, right? Magnet tool is awesome. It just lets you attach something to an exact relevant point. So bottom of a candle or body or whatever it might be. There are bad things about magnet tool, like if you're trying to use a brush, it's fine here, but when you start getting around a candle, it can just end up making straight lines, that kind of stuff. But that's definitely one of the important ones. Was that the color of the ciggy packets? Apparently there is a worst color. Yeah, it might be. That would be like how they make them put pictures of like shredded lungs and things on their boxes. It wouldn't surprise me if they force them to have a color that people hate, or the masses hate. It wouldn't be everybody, but it's probably based on, because there'd be some people out there that like to look at pictures of shredded lungs and feet and that kind of stuff. Feet. What else is good? Fib tools. Well, so you got fib retracement, and I've got videos on how you attach, do fib trades and stuff. But if you click on it, you've got your different levels. I've changed all this as well. Like I don't want lots of different colors. I don't want a trend line in my fib. I don't want a background, that kind of stuff. You can turn all that off. I do want levels. I want them in the middle of the line. I mean, you can kind of just like there's a lot of things you can customize inside TradingView and inside the tools, but the important thing is I want the levels, and I don't want the standard ones, because I think if the standard levels were, and the standard levels are good for certain things, but if the standard levels were really the miracle of trading, everyone would be an amazing trader because they're built in and they're standard. These levels, seem to be very relevant to how structure is created, where you will find key elements in the charts, minimum levels that the algos will move the price to based on certain conditions. Even just saying those, those things, I'll probably end up dead in a ditch somewhere one day. But that structure is basically what is the basis for a lot of what I do. Feel free, there it is, copy paste, brought to you by an alien who will never be found and killed. Yeah. Other tools, multi-layout views. So very useful if you're trying to scalp backsides of ranges that are very far back. You can have multiple timeframes. So this is, I've got so many tabs open. So this is where you can split the screen up however you want. So this is how we get that harnessing human emotion into a tool. This is how you can have split screen, and you could, as an example of this, take one of them and put it on, let's just say we put it on 4 hour, 1 hour, sorry, and we could expand this up, and then over here we might go away. We might have this on the daily. And so you might be looking at your lower time frame levels inside your daily trade, and one left, one right. You can either have elements like if you draw a line here, it appears here. That's great. Or this button over here, new drawing, sync, and layout. So if I turn that off and I put another line in here, this is now just specifically on that time frame inside the layout. It's in this box. It won't appear on this box. So you could add trends or whatever on one time frame, have another time frame next to it on the same token, be viewing them at the same time, but have the different trends and not showing on both. So these are just various things that you'd do based on some of the trading view tools. You can rename your layouts. That's quite handy because obviously your computer can get very angry at you if you have 80 tabs open. There's also TradingView kicks you off, which happens to me all the time. So you can rename and save them, and then you can come back in here and come back in here, and you have 1,500 layouts. But I could look up something like Sol 14D. Let's go 14D. And there's the Sol 14D chart. And the last time I opened it was the 22nd of October. So it's probably going to be due to be looked at again. And I could open that up and I could have a look at all of the pre-made structure. There we go. There's our 14-day chart. Not that it's relevant to look at this given moment, but as you can see, we rejected off the 204 area, which is to be expected when you come back up from the bottom of resistance. And we've got 5 days to go, so if we can close up inside this 188 area, then we're back inside this range again, and then we can bounce around. If it can close in 5 days time above 204, then we're going to challenge the hold level or bounce to the trend. So that's, then we can get rid of that. Don't need that. What other tools do I use all the time? Ironically, I almost never use trend lines because I use rays. Don't know why you'd use a trend line. They're kind of the same thing because you can modify a trend line. So you come in here and you can actually go extend. As soon as you tell it to extend, so extend right, it becomes a ray. So it's just kind of, I don't know why they call it a trend line. They could just call them lines because it's just a tick box that makes you extend them. So I use mostly just rays. A ray is an already extended trend line. What else do I use? Position tools. If I'm just trying to work out trades, so you got a long and a short position tool in here. So you can put that on there, and you can set a value. So this is quite good for working out risk reward as well. So if you're taking, say you want to take a scalp, so and share. Okay. So say you wanted to take a trade on this daily hold candle here, and you use your fib tool, and you work out that you're going to get that bounce between this and this. So you go, where do I want my stop loss to be? So I want it to be under here, so under the break of the range, which is there. So that's quite a wide stop loss. And if you take the laziest entry on the trade, you're only looking at a risk to reward ratio of 0.64%. So, I mean, if you don't have a super high win rate, then 0.64% is not really a sustainable risk reward. So, in which case, you may choose to find a greedy entry down inside here, and in doing so, you might end up with a better risk reward. But you might also not get your trade. So that's the other side of it. So you got position tools; they're quite handy, and copied the shit out of that. Yep. What else do I use? Obviously, you can add tokens. You can create your own custom symbols. So, for example, this kind of thing. So this is basically this is safety assets divided by, all safety assets divided by total 3 divided by totals, which gives you sort of a view of kind of like a dominance view, but just between stables and totals. I played with that a little bit. I haven't really dug too much into it, but ones that I do use on a regular basis are these ones. Not so much that one, but where's one that I use a lot? Oh, this one. Okay, so ones like this, which are BTC dominance plus the stable dominances, so all grouped together, because it gives you kind of an overview of the people that would move their. Some people are going to move their money back into BTC, and that's the maxis. Other people are going to move their money back into stables. So that gives you just an overall safety asset type overview. Then you've got things like totals. Where are they? I should really tidy this up, eh? I always leave the tabs open, so I just never really need to come back through here. Those? It's with others. Could have it without others. Not divided by BTC. Maybe I never saved them in this watch list. So then I've got things like here somewhere. There we go. totals minus the main stables. And that basically means what you're looking at there is a chart of risk assets, including BTC, but just purely risk assets. No, I don't have to really. So when I take the money out, then realized gains rather than on the actual trades themselves. Yeah. So yeah, totals minus stables. Better idea of risk asset. And what else? I mean DXY, strength of the dollar, because you can actually say, for example, this. So this is totals minus, totals divided by strength of the dollar. And it's quite spooky actually, right, to see that there isn't really that much of a difference between December 24 tops and the current tops, because the US dollar absolutely tanked in its strength so much that what people think is kind of like a much higher high is not really a much higher high in the value of what the actual risk asset is worth. So you see, like, even down here versus here. So I think if you just turn off all this clutter. If you did a direct comparison between this okay, so we want total minus stables, but not divided by DXY. This is how you do it. You just click on the plus to add your symbol, and then total minus USD. And you'll see it doesn't come up in the list like an option, but you just hit enter, and then you will get it somewhere. Oh yeah, here we go. And what's that, daily? So let's put this on daily. And see, they don't look, oh, I'll put it on the same damn one. I was going to say, they don't look very different. Of course they don't. Where did it go? It must already be in here. Oh yeah, there it is. Okay. So look at these tops. So when a lot of people were calling for this little line, snap it to the top there. Let's find the same peak. Here. Okay. There, come on. Okay, so let's declutter. So look at those two. That's your divided by strength of the US dollar. That's what it looks like just fixed to a dollar is a dollar. And so you can see that we really haven't achieved a new high for risk assets versus what they genuinely have as a buying power. Whereas you would kind of think we did over here because we got up to some much bigger number, but we didn't really, if that makes sense. So that's kind of another reason why I think, we might still have one more pump, because it's pretty hard to call that a blow off top when it really hasn't blown off anything really. So what else? Any more TradingView questions? You're welcome, Master Pastor. Back to that trend line. Grr. Okay, so now we're rejecting off the whole candle here. So that's gonna be a little bit of a pullback to here, and if it gets stuck under here, then it'll struggle. If it doesn't, it'll be able to recover, but it's got to go through the process. Meanwhile, the 4-hour is back up above all of the levels that it dived through, including the trend. Aster scalp is done. BTC liquidity is starting to get really dense to the top side, which is kind of pretty empty to the bottom, or a big gap to the bottom really. So they'll either go sideways from here and build more liquidity and then just keep screwing with people, or they'll potentially that fast move up might have actually trapped quite a few traders because they would have all jumped in to chase that short. So they might just go sideways for a bit and then then move up. What are your crystal ball thoughts on the end of the year? I don't know. It's kind of hard to see that far ahead. Pretty much my ability is that I can see one candle ahead, and that's based on structural creation and confluence between multiple timeframes and levels, and also how the candle actually, or specifically where the candle closes, because it might close in the middle of two triggers, in which case no one can tell you whether it's up or down first. But there'll be multiple closes on the same day, and so you might be able to tell what the 2 day is going to do, but you might have no idea what the 7 day is going to do. And maybe they close on the same day, but all you'll know is one of them. As far as saying how things will be by the end of the year, the thing is there's just too many closes between now and the end of the year, and all it takes is to have price in a certain position at a certain time, and you change the outcome of what comes next. So that's where it gets a bit tricky. And the other aspect is just ranging, whether or not they're going to build ranges. Because if they're going to build a range, you can then see a little bit ahead, a little bit more than just one candle. You can sort of tell, okay, well they're gonna do this, then this, and then that will result in at least these other things happening. And that's kind of what I've been observing just with this dip that we've had today. So if we look at this 4-hour candle, let's get rid of all these lines. Okay. So where was that? No, not that one. What was I looking at? Sol, right? Sol. What's the daily? Here's the daily. There's the daily. Okay, so this daily candle down here, as far as how you can kind of crystal ball the future, if I was to put the fib on that candle and see that the engulfment closed just above the 1.618, see that the 1.618 has been used as support continuously. This is trying to create a range. And then what you do is you look at these other levels and you go, do these levels make sense? And the 208 makes sense because that keeps it within the boundaries of having a perfect monthly close. The 199 doesn't really make too much sense. I mean, there's a couple of levels that are like 200.5, so it's kind of close. The 217.6 makes perfect sense. It's literally the hold of the top of the prior range. So then from looking at the size, from looking at that, you then go, okay, well, what have we got here? If I go hold candle to origin level, which is this level here, which it bounced off, I've got roughly 7% between here and here. So then if I look at the top break level, which is not an origin level yet, and I go same thing, look at this. Yep, got about 5 and a bit percent. Okay, so fairly close. Then they're probably going to try and make that at some point. They'll try to make that the top of the range. And there'll be an interior range where this 217 perfectly lines up with the whole candle. And the catalyst will be, can it close over this on the daily? In which case it stays in here to give you a perfect monthly. It goes up here after the monthly has been configured perfectly, and then it tries to break out the top of the range. There'll probably be rejection either of this or this to begin with, and then once it overcomes it, it could then travel up to become something bigger. So you can kind of tell based on the structure and size of the candles and how they create them what they might be trying to do ahead of time, but it's all just reliant on these things actually getting up over these levels at certain times, and you can read other things into it, like this yellow candle touching the trend line. That's good because the wick has touched the trend line. Doesn't matter how this candle closes, it can't actually create any more trend resistance. Whereas if it was a yellow candle that closed lower than the trend line, then it could add an additional layer to the trend resistance. The fact that they're they've hit the break level on every single candle, means that they're not trying to create a range top, so therefore they're probably going to look to go up. So there's lots of things you can kind of deduce from how the structure is, and but if you ask me what the price is going to be at the end of the year, I honestly couldn't tell you. If you ask me what the price is going to be maybe a week before the end of the year, I might be able to. Uh, don't know. I don't think it's worth entering anything until you see how the month plays out because it's so close now as far as long term. Yeah. How this closes can answer that question. If it closes with a hold level, nope, not worth entering. If it closes without a hold level, worth entering some because they'll probably still grab the downside liquidity anyway, even if it closes with a hold level. Oh, sorry, without a hold level. I don't think it'll be a pretty rare occasion for, I don't know, let's find an example. See this here? It closed with a positive hold level, still wicked all the way back down almost to the body of the candle before going up. So that's where's a blue candle without a hold level? Here's a blue candle next to a yellow without a hold level, still wicked down below before going up. I mean, here's a blue candle with a hold level created for a swing to the upside, still went all the way down before going up. Yeah, that's a good question. So the reason I'm not keen right now to take any kind of big positional shorts on high time frames is because if this closes with a hold level, it could still do this. Because if it is a normal 4-year cycle, we're about to wick all the top liquidity and then go into the bear market. And I'll find an example of how that happens. Well, I mean, this is actually a perfect example right here. All right? Just think of it the other way around. It creates a hold level to the upside and it's going to pump. But the first thing it does is dumps to grab all the liquidity before the pump. So now, if this is going to be the trigger for the bear market, this hold level, well, then it's going to do what this did. It's going to spike up and then dump. So I'm just not really looking at taking any big long-term directional positions. This doesn't make sense to do it right now because one way or another you're going to be wrong. You're either going to be going, cool, I'm going to short, and then you're going to be massively underwater for a long time, maybe a month or so while it wicks up and comes down, or you could, I guess, counter trade it and try to long it, or you just don't bother looking at the monthly. The monthly tells you what's going to happen, and then just trade the lower time frames. We've got some pretty meaty levels. We've got some really big levels too up here. And even if this thing does make the perfect monthly structure and try to go up, it's got some pretty big stuff to run into. If we, so say for example, we don't create a hold level, but we wick or come down here to the range trend, I would open a positional long because there's no resistance, and it was clearly a complete liquidity sweep before a huge pump. That would be a definite case to open a big positional long. And if we do create a hold level like this, I'd look to create a positional short, probably somewhere just above all-time highs. Maybe up around these range trends, around the 300 area, if it ends up going all the way up there. It's no different than I'll give you an example of BTC. I think it was daily. BTC. Okay. It was. Is it there? I think where it was. Here. Okay. Right. So this is where it gets really fun. This structure here meant that this was a completely unsustainable top. And you were going to get that. So did you short this immediately and get stuck in all this, only for it to play out eventually? Or as soon as that candle flipped, you realize that we're coming here at some point, minimum back to 84, that's the minimum retracement target. And then at that point, all you're really looking for is failure. You're just looking for something to fail. And of course, what happens up here, we create a daily origin, retest, and then we continue to fall. And we're going to come back because we'd already created failure. It was going to come back. So that's the sort of problem we've got now on the monthly with Sol, is that we might close the candle down, show failure, and then head off to an all-time high and then come back, because it's the timing is basically the issue. Yeah, I think it was about 201. So $200.579. want to close above that. And you really, really, really do not want to close below that wick. Because if you close below the wicks, you can have an even faster dump. Yep, a monthly. Right. I'm just going to be back in a second, I think. I think my alcoholic beverages all just arrived. Moment. Don't worry, I've come back. And that is the sound of grape vodka. Right. What are we up to? Yep, so 23 more minutes on the 1 hour candle. Have you ever seen candles close? Yep, all the time. It's really annoying. Not so much a doji, but just like a lot of, like just a line of candles that just have almost a flat top across all of them. It's usually a cent below where my flippin' TPs are. I remember one time looking at a 1 minute chart and there was just this flat line of 1 minute candles just going in a straight line across, and it was I was like, yeah, my TP was just above it. Would not touch my limit order. Okay, yep. So, resistance is created when you have failure to accumulate or distribute back to a level. So what that means is, say, for example, let's find a level. Okay. So this is kind of good enough. When we hit a level, if we cannot keep hitting the level, which these two candles didn't, then the level is more likely to reject. Okay. So we hit it, couldn't get back to it, still couldn't get back to it, hit it again, creating a hold level. Hold level kind of supported the price, kind of, but the level became stronger as far as resistance. We created a range trend. We lost the range trend by closing under it. We pushed up, hit the level, hit the range trend, rejected harder. Okay, so now if we look at another level, so that means that level across there in general is got a lot of resistance. This level here, we hit it, went through it, tested the backside of it, it becomes support. Right. There was no failed accumulation once we hit that level. Managed to get through it, did a retest, go. This level, no failed accumulation, got through it, went up, grabbed a whole bunch of liquidity, did a retest, up we go. This level, got to it, failed accumulation, didn't even get back to it, gone. Fell off a cliff. That level, which, so you got above that level, but then failed because of that level. Which actually meant what ended up happening, this is why this never got back to that level, because then this level hard closed back under here and then rejected off it, which is why it never made it back to that level. This level, got to it, failed to accumulate to it, fell off a cliff. So when we get back to this level, this 201 level, you'd expect another rejection off that because it failed to accumulate back to it over here. So it becomes a stronger level of resistance. So then on the bottom side, it's the opposite. So say this level down here, we hit it, we failed to distribute back to it. In this case, it got really bloody close and then it bounced. So maybe on the, might have got to it on the spot chart. Yep, so I touched it on the spot chart. So accumulation, hit it, failed to get back to it, hit it, bounce. So the strength of a level, and that's why they call them origin levels. An origin level is a break level where they fail to distribute or accumulate back to it after touching it, and then it becomes stronger. So stronger for support, stronger for resistance. And there is something very similar with trends, which I've been working on for a while, but I haven't really been able to get my head completely around it. So when I do, I'll tell everybody, I'm sure. But it's just something like this. You got a trend, you fail to get back to it, which means the next time you get to it, you sweep the liquidity and then you have a big dump from the trend. So there's yeah, when I completely understand this, we'll add it to all the other strings we have on our bow. Yeah, hopefully that answers your question. Look at this. Prime for the squeeze. Oh. President Trump announces that the US and China have reached a 1-year trade deal on rare earths and critical minerals. In return, the US is cutting tariffs on China, and the 1-year agreement will be negotiated every year. Awesome. So they've got a way to pump it up markets once a year. I wonder if that means we go up now. Good night. Yeah, maybe. Maybe it's why we started going up, or maybe it was just those support levels that were lines on the chart. What was that? There was that long we saw the other day. Saw just when we were flipping through those various levels that showed we were going back to 115 anyway, and we know we've got that hold level at 114 that the trend is targeting. So I think it's wherever that is. Yeah, we've still got to go back and touch this hold because we bouncing this trend, which means we come back to this hold. So it's just a matter of time. Remember that 3-week short is complete, so we've got less downwards pressure now than what we had before. So that's good. So we've got a 15-minute uptrend. We're just closed above that horizontal level. So we've got a range trend for rejection. We've got a break level, trend retest, exterior trend, hold, candle. Do you remember earlier when I said when we break this downtrend that was in here, we start moving back to this hold because we've already tested the backside with this candle here. So that was when that was when the trend was there. So we've broken it. Now we're working our way back to this. And so we're heading here. Unless we hit this first, which can only happen if it goes, sideways or down and around and then up or something. But so this is when you break a trend, you target a hold or a break, and whatever's already been tested, you're not going to test again. So also, when you break a range trend, you travel to another hold capable of creating a range trend, or another range trend if it already exists. But in this particular instance, it'd be if you break this range trend, you'd target this hold to be able to create another range trend. So there's a couple reasons why that's going there. But the moral of the story today is retire on Asta. No, not really. I joined the IA Discord um, a long time ago because I sort of thought I would want to learn more about long-term investing, but all I've really realized about long-term investing is I can make less money doing that than just short-term investing. So maybe one day if I just can't be bothered trading anymore, I will look to pick some asset on a high time frame and just put money into it and leave it, walk away. But it just doesn't make sense. In my mind, I just can't wrap my head around it. Suppose you could pick amazing stocks or something and get a good return, but you know, 1% a day, 1,200% return in a year, compounded. And it's not like I don't have the time. So and there hasn't been a single day this week that I've only made 1%. So it's been more than 1%. Do you have voice training? No. No. But I don't speak much outside of this. In fact, what's really quite interesting is how you almost lose the ability to communicate in English when you don't talk to a lot of people. I mean, I have friends and stuff which I catch up with, Fridays, weekends, or whatever. Occasionally, most of the time, you're pretty drunk pretty fast, and you don't really do a lot of coherent talking. But most of my day is spent in silence if I wasn't here. Yeah, yeah, you just compound it. So obviously, there's caveats to this, like number one, you have to not need to take the money out for anything. So you've got to have a decent amount of income or a decent amount of money to live off, whichever way you want to play it. But yeah, go in and have a look at. So when you think about like how much the price moves on a daily basis, right, that's the first thing you probably want to consider is how much it moves on a daily basis. In fact, sorry, it's 3,678% in a year. I think I might have been thinking. What was I thinking? Maybe not doing it every day. Don't do it every day. It's still 1,200%. But if you go to this website, go have a play with this. Where's that? Where'd it go? I'll go with that. Well, no, it reduces the risk, really. If you're just trying to make 1% a day, how many 1% moves have you seen just today, up and down on tokens? Hold level, origin level, or a trend trade? How many could you have done today? And if you just did it with spot even, so is there risk? Yeah, you could get it wrong. But if you pick, yeah, at least 5. I mean, that one Aster scalp was 2.8%. And that was one scalp. The Sol one first thing this morning, or the two actually Sol ones this morning, one of those was about 1%, one was about 0.7. So, yeah, it's kind of 5% already in a few scalps. And then that's it. And then you don't have to think about having a position open and the next time stupid Twampy tweets about beans or, you know, whatever excuse is required. Do you miss out on one pump? Maybe, but you also miss out on the retracement of it or the dump that might come out of nowhere. Like you just, so the only time I would consider buying spot again and holding it would be if we see another 4-year cycle. Like this is my long-term investment plan. This dictates when I would actually consider buying spot. So buying basically through these weeks here, which are typically always the bottom, selling in this period here, laddering out because that's typically always the last move up, to come back in again at the bottom, to then sell out through this period here because that's usually the top, to ladder back in at the bottom, to sell out through this period here. So until this changes, I'm not going to change. We've only really got a couple of weeks left before we could see a blow off top. We've got targets for it. We know roughly where it'll be. And then if we start going down after that, and every single one of these dumbass influencers starts making up excuses about manipulation or the super cycle's not real or, oh, I got tricked, whatever, then it's just we're repeating exactly the same thing that's gone on since the beginning. So, we'll just, my thought process is it hasn't changed yet, so why be completely biased that it is going to change? So yeah, if we get to, in the future, if we get to about here, which is probably where the bottom would be, Yep. I pasted the code for this in the. Are you in the Discord? I don't know if you're in the Discord. Yeah, yeah. I don't know whether it will be different, and if it is, we'll just find another way to make money. Um, but if it isn't, then all we're going to do is start shorting and compounding, and then look to buy BTC again when we hit this trend, which is basically our main support trend from the cycles. There's actually another couple now because time has evolved, so it's a few different places. But yeah, then we just do it all again. 6 to 12 months. Yeah, maybe. Um, so if you're in the Discord, I pasted it yesterday, I think. Just it's an indicator, and you just apply it on the Bitstamp 1 week BTC chart, and just add it in by going to Pine Editor down the bottom here, and then just create a new indicator and just copy paste in what I threw in the Discord. Just do a search and you'll find it. Yeah, the other thing that has never happened before is typically we need to see a crossover of the moving average with the previous high. Need to see this happen. And so this is also kind of why I'm thinking we're going to have a bit of an extended cycle. I don't know how long that extended cycle will be, but this needs to get to here. And because we've been so flat through this period, this has stayed lower. So yeah, that's the other one I've been keeping an eye on. So it's basically between this, which kind of says we've got a couple of weeks to go, and this, which is showing that we, well, if we have a real fast spike soon, this could come up quicker, but basically we've got this and this. Both of them say that it might go a bit longer, but who knows how much longer. None of them say that it's going to be like an 8-year super cycle. That's just clickbait. Good morning. First one doesn't count. Stuck under the range trends. So we've got this whole candle. It's bringing us back down to at least here, which is just tapped now. So it's short. If you'd bothered to short that, that's done. "57 minutes to see whether the 4-hour closes with a downside hold, which could create a break of the trend. So that's the one to be watching for the next close. There's nothing really structurally significant to bother watching on the 1 hour. I mean, it could close below trend, but doesn't mean much because it's not a hard close. But the 4-hour means something. See if it creates a hold level. Yeah, we had like a pump and then a dump and then a pump and then a dump. That's pretty much it. And BTC is just creeping more towards that dense upper liquidity. Sol, on the other hand, kind of has some pretty big gaps up above because people just aren't really shorting it. First touch range trends are just beautiful, beautiful scalps. First touch RT scalps. Okay, so um, this is one. So blue candle close into the blue hold candle creates that range trend. Okay. first touch of that range trend is this one. Now this wicked down because there's other range trends happening in here as well, which are on a higher time frame. But even if you'd just scalped that range trend right now, you'd be in profit. So that would be getting it kind of wrong, but still winning because first touch of range trends are going to win. The target becomes the hold level. So this time frame actually doesn't really have a hold level because the candle's not closed. So in 53 minutes, actually, the candle could be back up above even the normal trend, just if it just keeps pulling back up. So what you'd do is you'd monitor it for the close, and if it closes below the wick of that candle, then you'd assume that that candle becomes the hold, and then you'd just TP it, right? Or you'd TP it when it went anywhere into the wick. Alternatively, what could happen is the entire candle could come back up above the trend because it has dived the trend, and that's another type of trade. So that's basically a trend dive into a hold. So that's where you would have taken a trade on that hold because of a dive of that trend. And instead of just taking the TP at the 1618, you'd respect the fact that it's come from the top side of a trend to the hold, which means you'd look to take the TP at the trend, which would give you a better risk reward. So there's a couple of trades just right there on that one screen, and so you could, maybe you don't know whether it's going to go to the hold, and that's fair enough. Like you might think, oh, what if it just bounces the trend and doesn't touch the hold? So what you could do is you could put half of your entry here and half of your entry at the hold, and then you'd end up with an average that's down halfway in between, and you'd be nicely up in profits there now. And if you've been looking at a bigger overview of the time frames, you'd see that there's this 12-hour one that's coming down here like this, and you could have taken that because you're actually diving through the 4-hour and hitting the 12-hour. Could be probably even more. You got the 8-hour. 8-hour doesn't have a hold level yet either, but it does close in 49 minutes. So an 8-hour actually came from above a higher trend. So this actually could come all the way back up here above that trend in the next 49 minutes. And there's no actual untested hold level to target. So technically, as a touch of the 8-hour range trend, this damn thing could come up here. So it's possible. It's just not going to be a single magical candle like we would love to see, but this could be the start of a move to 1.14 based on the 8-hour. Other ones would be like this short. So range trend created, first touch, did go up a little bit higher on the second candle, but then dumped. Okay, came back down, hit the backside. So on some other time frame, these two candles, they're going to be one candle, and that's going to be the hold. So that was your trade. You would have entered here, TP'd here. That's first touch. Now you got another rejection off it, sure. You got another rejection off it, sure. But these are never as much of a promise, whereas this one is as close to a promise as you're ever going to get in trading. And if you want to take, if you just want to earn, if you just want to double your money, say you just want to make 1%, 1%, 1-to-1, all you're going to do is you're going to go short, first touch of range trend, down to the hold level, give yourself a 1-to-1. And I know everybody will bag the shit out of a trader who says get a 1-to-1. But think of it from this perspective. If you could get a 1-to-1 on a trade that is nearly 100% win rate, are you an idiot? You're not an idiot, right? So many traders will bag out someone who says a 1-to-1, but so many traders don't have a win rate like what I do. So you just tell them to shut up. Just take the really good statistical wins. So you can just go 1-to-1, put $1,000, make $1,000, job done, and then do that 10 times a day. Which you're probably not going to do 10 times a day on an 8 hour, to be fair, but I guess you get the point. So still going up. But you can do it on 1 hour. And lose. That one hasn't had a retest. Yeah. You've really got to work high time frame down. Because like when you look at that same range trend on the 1 hour, it's a really big deep dive of the range trend, but that's because you were dealing with something bigger. Which is actually probably another key thing just to put in the memory bank there, is that you always work top down, because if you just zoomed in on a 15-minute chart, and if that's all you're looking at, you might run into a 6 hour level, or whatever level. You might run into a daily level when you're scalping on a 15-minute chart and just wonder suddenly why your level just turned to shit real fast. And that's if you've been on one of the streams where I show how you build a box and then you trade within the box, that's kind of the point of that. It's like you know where the weekly boundaries are, you know where the daily boundaries are. And after a while, you just sort of get really fast at it. You just pick a... Does the retest have to be with candle of the opposite type? The range trend. So range trends can only be created with candles of same type, which means that if you had, okay, just hypothetically, if this was a yellow whole candle and this candle closed blue, that would not create that range trend. If this candle closed blue, it would not create the range trend. And then if a candle came up here into this hold, even all this time later, but closed yellow, it would create the range trend. Yeah. Especially because of the power of compounding. This is kind of the thing that I just really want, like I would like to see in the FibLab Discord in a year's time, if everybody just didn't care about whether it was a bear market or a bull market, if we just don't care, if we just take whatever amount we're playing with and we just go 1% per day for a year and we compound it, and let's make sure we have some time off. So let's not trade every day, and fair enough. How about we just all do that? And then at the end of the year, when we've all had a good year and we don't care what the price is on the token, and we don't care what the narratives are, and we all have done extremely well, Let's go party on Bora Bora. Meanwhile, yeah, it doesn't matter which direction you trade the range trends. It could be longs or shorts, but and there won't always be a hold level. Sometimes there is no hold level, and if there is no hold level, it's going to be to a break level or another range trend or something else that can create structure. So sometimes there'll be a small move, and sometimes there'll be a big move. Um, a lot of it depends on what the structure is that's around it. And if you were to get something like this, so let's say you had some range trend created like this, and then you broke the range trend, and then you had yellow candle, yellow candle, yellow candle, yellow candle, yellow candle, like that, just up, 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 up into the sky. And then you created some other range trend and you rejected off it. Well, guess what? You might have nothing to hold that rejection. And it wouldn't be like a straight line because it never is. There'll always be something over the backside there or some lower time frame stuff that makes it waddle like a retarded. Yeah, anyway. And then it gets there. But that's a lot of it just depends on what's here and what's over here. And there was a point actually when that played out so nicely on Sol on the, I think it was on the weekly, down, down here. Like, you had this big wick, you had this. There's no structure here. So once it broke out of here, just straight up to there. So, and then even this structure, so you had a range trend like, now that went straight up, right? Which means it can go down really fast. So you had a range trend like that, and your other range trend's there. And so you went up really fast, you created a range trend, you rejected the range trend, you come back to the range trend. Now you could have taken it to the hold. That would have been perfectly justifiable, right? And that would have been a great trade, from up here to down there. And whether you took it as a one and maybe added into it, you could do that. You could narrow down to a lower time frame. You could say like on a weekly. And this is how you would add to positions or balance balance risk and change leverage. So maybe what you do is you go short this level to the hold. This is where magnet tool sucks, by the way. So maybe you go 1-to-1 on that short. And that's a huge stop loss. Like you're not even going to get, as you can see, it didn't even get close to it. But you got this weekly hold level here. So maybe we dial it down to a daily. So let's look at the daily after we first touch the range trend. Okay, so let's go put. So this is the one that creates the range trend. This is the first touch rejection of the range trend. So I want to look when this candle closes under the range trend. I want to look in this candle, this one. So put it down to daily. Let's look at the daily. And what do we get going on the daily? Well, we get this blue candle, we get failed accumulation. So failed accumulation at that level right there, because this candle closed underneath it. So now I could consider bringing my stop loss all the way down to here and changing my risk. So if that was my 1% risk all the way up there, I could now decide that this is a very safe place for my stop loss, and I could increase my position size, which would change my average. So my entry would come down here, but I would now change this to be the same dollar value risk of my overall portfolio as what that higher stop loss was, but the size of my position could now be bigger, and I'm still aiming for the same target. So that is when the weekly has now evolved into the daily. And you don't have to even wait that long. Like, you could probably look at, say, a 4-hour and look to see if there is some kind of 4-hour structure. So same thing, failed accumulation on this candle here. Stop loss would be about the same, but you'd be adding in to the position somewhere up here. Be adding into it about there. So you can adjust your size of your position by bringing in your stop loss after you've already started the trade. And once the trade has started to create the structure to actually decline, and the rest is history. Yep, definitely after. Definitely after. It's not first touched before, because you don't know where the range trend will be before. It's where it closes, creates the trend. Mm. Oh, that's good vodka. Might be time to go sit on the couch and drink, and watch Netflix, and wake up a little bit richer in the morning. We'll come back later. Yeah. The other thing you can do is just use that direction as your bias and then trade every single little move that happens within it. So that would be the next sort of way to just compound your money. If you know you're moving from a if you know you're in a weekly range trend to a hold, so let's just go with that same one. Oops. And we know where our target's going to be. They're either going to be this, which was the perfect target, wicked, or it was going to be somewhere below here. Here to here. In fact, let's use a rectangle. I haven't been using rectangles anywhere near enough in my life. Okay, so we knew the target was going to be inside this, or the target was going to be down here. And we're only going to take the conservative ones, because what I would like is I would like for every single person that follows me just to take really high probability trades, conservative TPs, and let's go to Bora Bora. Right, that's it. And let's mark out our first touch, which is this candle. And this candle closes when this candle opens, so we're going to look from here. So our bias is to take every single short for however long it takes for this candle, to go to here. That's our bias. And then we could choose a time frame to do that on. We could look at all the time frames. I mean, you could basically take anything you wanted, right? So first thing that we're going to do is we're just going to short the break level. We'll just short this. So short that. And what are we going to target? We're going to target the hold. So we're going to target this. So you've now got a couple of positions running, right? So you've got your first position that's going based on the weekly, and you know that you're just going to keep that bias until you come down to here. So you short the break level and you target the hold. And then that's closed, but your other position is still open, and the price starts going back up. And you don't worry about that. What you do is you look for your next break level, and you go, there's my next break level. Oh, my break level becomes an origin level. Awesome. I'm going to short it even bigger. And so you can take more risk on a polarized level. So then you short this. And then you don't bother with the hold, because the hold was already wicked by this yellow candle, this third candle in. So you don't bother with the hold. It's not going to go to the hold. It's going to probably go to the break, which is the break of that. So then you TP there. And then you go, okay, well, where's my next trade? Well, my next trade is going to be this hold level or this break level, one of the two. So you could take a short again on either one of those, and you short it. And then you go, okay, where's my target? My target's probably going to be this hold level or this break level. So I'm going to target, I'll probably target the hold, right? So now you've taken another short between this and this. Then you go, okay, what's my next trade? Well, this hold level is actually an origin level on the underside. So when this blue candle closes here, it breaks that origin level. So you just go market short. You just enter a short. And what do you target? You target the next origin level, which is that one there. So blue candle goes short. You just go boom. You catch that wick down to the origin level, and then you get a bounce. And then you go, cool, that's my next trade in the direction of the weekly. You still haven't hit the weekly yet. Okay. And when we enter this box, we've hit the first target of the weekly. So now you stop being a bear and you start going, okay, I'm neutral now, because I've hit a level that's the minimum level that my short could go to based on the weekly. I've taken numerous other shorts inside of my short, all in the direction that I know will play out because of the weekly. I've made money after money after money after money after money, and now I switch and I'm like, okay, I'm neutral. I'm not a bear. I'm not a bull. I'm just confused. I don't know what's going on. And then you go, okay, well, where's my next trade going to be? Well, I've hit a level I might bounce. So let's see. I create an origin support level in these two candles. I long. Where do I take my TP? Well, I take my TP at the other origin level, which I've already marked out here because it was the one that we bounced off here, and that's there. So I actually now get a long. Now I TP at the origin level, and I wait. What happens? Now I get this rejection. I close underneath it. I do nothing really. Like in this particular instance, you'd probably do nothing, just purely because there's not a lot of distance between this big candle that broke this level and where it could be going, which is that origin level. So it's not a huge candle, not a big move. So you probably just wouldn't take a trade. Okay, so you are currently now not in the market. You've taken X amount of trades through all of that, whilst having a bigger high time frame trade that's been running along. You took the long off the reversal level, which makes sense because you'd hit a weekly level. So a daily reversal off a weekly level is perfect. But here's a hint. If you get a daily reversal off a weekly level and you reject at a daily level and it doesn't overcome it, something's wrong, because a weekly level should not get stopped by a daily level. So that's where you know it's probably going to keep going down, and you could then look for some kind of entry. And what you would do is you'd say, well, this hold level's been hit, but the break level hasn't. So I'm going to keep an eye on this break level moving forward. You'd also get range trends. So these are all just trades that you can take. In fact, this is a 4-hour. If a 4-hour level stops a weekly level, the weekly level's poked. Okay, so you get this. Deviation over the range trend, deviation over that, hard close underneath, shorted again, this candle. Target this origin level. Goes straight through it. You know what I mean? So you can have a trade on a higher time frame, and you can either adjust it and let it run, or you can trade within it and trade in the direction that you know that it's going, and then you can effectively, every time you open that other position, you're actually adding to your risk because you've opened more of a position. And you could use it. You could do it either as depending on the system that you're using, a DEX, a CX, or whatever. It could either be a separated, isolated position, or it could just be the fact that you increase or decrease the size of your weekly position at key areas, and that's what I do a lot. Like the trade I've got open now on Sol, I couldn't care less if it went to 170. It's just not even big enough to be a problem for me. And then I could add another 5,000 Sol when it hits a key level, and I'll be out of it in a couple of dollars. So it's just, you can add or remove amounts to a position following the larger time frame move. Meanwhile, you're actually compounding your money and your wins as you go along. The burps have definitely started. And now there's silence. So feedback. It's 20 people in here. Feedback. Is what I'm saying relatively alien to you, or do you understand it? Because I was talking to someone today who I keep getting requests to make a course, and in my opinion, that's kind of a meme. Like, traders who can't trade make courses. But this person is telling me that I should make a course because it's different and it's something that not a lot of people have ever seen or know. And if they could understand it, it would be very valuable. Not from a monetary perspective of selling the course or whatever, but just valuable to them to understand it and trade like this. Um, and what he said is he said that I've probably got a lot of people that follow me, but actually have no bloody idea what I'm talking about. So, feedback, please. Be honest. Does this make sense? Cool. Homework. Yeah, I mean, replay tool's great for homework. Cool. Oh, thank you. Thank you for taking notes of timestamps. Okay. Meme courses. Um, yeah. Secretly, you're really good, Fling. We know that. You're the silent person in the corner who's actually doing okay with all this. Not always silent. I know you help others. Yeah. Terms. So most of the terms I use are terms from Cotton Candy TA. Um, but some of the other things that I do are just things that I've figured out over time. Like what happened with Asta, like trend dives and retracements. Like he doesn't even go remotely close to those rules. Yeah, there's just things I just learned over time where, hey, every time we dive that trend and hit that level, we go back to that spot. Therefore, guess what? If it happens every time, it's something you can trade. Yes, you work in the shadows. Attendee. Yeah. Well, attendee is a particular uh I can't even think of it. What's that it's that line off the Matrix where that guy goes on about it's a mixture of amino acids and blah blah blah. It's everything the body needs. You know? That's what attendee is. It's the perfect food. It's all you need. Meanwhile, while we sit here and shit talk, you know BTC's going up, eh? Squeezy, squeezy, squeezy. Come on. So the new liquidity layers that have just been introduced into Sol are between 189 and 203. So it's escalating upwards. So before earlier today it was introducing layers at 184. Now it's introducing them at 189 to 203. So it's yep, that's that's what you get when you do that little quick pump up. People chase and then they end up chasing at a higher level than where they were before. I'm still laughing at what is a tendy. If that's a serious question, by the way, it's a chicken tender. Not quite sure if you're serious. Retire on Asta. Hey, look, retire on Asta. Where is our Asta chart? Nope. We still haven't got our entry on that one. Oh, we might get this. If this keeps going down, we might get this soon. Look at that work. So there'll be a candle closing that's must be 4 hours. It's definitely not the 12-hour. So the 12-hour, this candle on Asta is going to, with very high certainty, go to that hold. It's just you've got 4 hours left on this candle, and then you're going to have another candle, and so on. So, and it might go up and down, but that's just first touch 12-hour trend RT to hold. There's different things like this is what, so anytime you get a fair value gap or an FVG, like a fast candle drop, this, there are things which are called inverse resistances, which are these wicks of these blue candles back here. They are basically the backside of some kind of range. And so what I would like everybody to do if they're taking these trades is I would like you just to not be greedy and just take the first thing that could possibly be resistance, which is, this wick, which was the origin of the trend. And if you do that from here to there is a 6.5% move, and you're done for the day. That's the only trade you need to take. Yep. Tools will come. Tools will come. Just got to make sure they're... Well, okay, feedback from 22 people, so not a huge sample size, but we'll go feedback. Would you prefer they were released good enough, or would you prefer that they were really perfect before they were released? One vote good enough. Two votes good enough. Yeah, good enough. Okay, perfect. Okay. Yes, yeah, I'm trying for perfect, But the problem is I'm actually, as I am going through these things, the power of the ability, the power of um, the data that I'm getting out of this stuff is, yes, I've heard that. Perfection is the enemy of progress. I like the other day, for example, um, better than Marty. Oh my God, flipping a coin is better than Marty. In fact, just yeah, God, yeah, okay. Just take your money and set it on fire is better than Marty. You probably got a better chance of actually keeping some of it. Just the fire may not spread to every dollar bill. You might, anyway, end Marty rant. Um, the I downloaded so that thing that we've developed that picked nearly every daily top and bottom um, would have allowed a spot holder to compound 575% in a year. That actually came about because the alerts that have been going off in my TradingView for weeks now, I downloaded the CSV file of all the alerts, and there was a structural pattern to the alerts and how they went off. And then when I looked at that structure on the charts, there was actually thanks for sending me into a rant. You could actually find that there was a means of actually establishing what was going to happen before it happened. So it's converting it into an indicator though is nearly impossible because the limitations of PineScript, you can't actually get it perfect. Yes, rant baited. All right, so consensus vote so far is good enough. All right. I'll talk to the powers that be. Well, it's now 8:50 at night. I'm gonna go chill out on the couch, get drunk, and as far as key levels to watch, probably just keep an eye on what am I doing? 114 for Bitcoin, of course, because it is the 43 because it is the target of the 43-day trend. So don't, let's say, make them as accurate as possible. Okay, cool. Don't be surprised if we have a rejection there. We have definitely got the condensed liquidity for it to be a relatively fast move if it's going to go there. But we also have the condensed liquidity for it to wick through it. So you might there was when we were going through all those timeframes, there was a target in play up to about 15,500, 15,600, which is sort of up around the top of that block of liquidity. So you might get a short squeeze. Okay, it probably will need something in this gap if it's going to happen. So yeah, the other level is 12,800 is a level. And of course, we've got the most bearish case level, which is the one that we're pushing into right now, which is this here. And that was, we want this to close over 111596 today. So 111596 could be a rejection inside here. But there's confluence at about that 112700 with the retest of that broken trend through there. And there's polarity as rejection. So that's kind of like saying we expect BTC to go lower, so therefore it will not create a hold level above 114, because if it does create a hold level above 114, that doesn't meet our expectations of a liquidity grab to the downside, because you don't create hold levels to the upside if you're going to go down, and that would be that 114 area. So pretty much everything from 111596 to the sort of 12600s through to about the 114. I'd watch those levels, and Sol has been super bullish, but I'd still say closing over the trend 197, level 2 of the range being developed 199, level 3 of the range being developed 208. Probably keep an eye on those levels there, and just also remember 204 is a high time frame level that exists just about everywhere. So if we get back to 204 and you're in a long, it's not a bad idea to take profit at 204 anyway, just to be sure. The liquidity on Sol short term is up to about 210. We do have some levels that are in longs to 210, which I may or may not have on my chart. Oh, here it is. The weekly hold level is over the top of the trend. It's over the top of the downtrend. It rejected off the weekly level of 204, but the fib target is trying to push to 210. So you may get a push up through the resistance to take. This is if they want to be really greedy little buggers from everything they took this morning. The top side of the low time frame liquidity is 210. So just bear in mind, you could get up to 210, and there's those various levels in between. And I bid you all farewell. Thanks for watching. Like, subscribe. If you're watching this as a replay, like, subscribe, join the Discord, send gifts of tendies, and all that stuff. And we'll catch you all again.